Looking perhaps surprisingly positive. FTSE futures certainly looking quite bright this morning, and not a clear driver behind that. Yes, the oil price is higher, but we'll see if that actually materialises. So the opening trades then here for Europe are positive, not by much, but we're up by 0.2% or so on the FTSE 100. The DAX is also open. Stock 600 then flat to positive this morning. The story around yesterday over in the United States was that rotation, as Tom, you were saying, out of those big tech names into some smaller caps, into the Russell and those small caps within that. So we'll see where that leaves Europe. FTSE 100 is stronger this morning, quite substantially so, up by 0.6%. The CAC 40 up by 0.5%. Perhaps there's some energy names in the FTSE 100 that are lifting things on the back of that oil price, but it wasn't such a big move in oil, so we'll see where the drivers are coming from, Chrissy, then, in terms of a deeper dive into these morning moves.
Well, Anna, your prediction was right on when you look at what you're going to see moving in the Stock 600 in particular. You are seeing some underperformance from some of those tech names. For example, your biggest index weight is going to be ASML, down by 0.8%, contributing by your biggest weight to the entire index, but your outperformers are exactly what Anna was just talking about. This oil story, your Totals, Shell, as well, BP, all higher on the Stock 600. And by the way, Shell and BP driving some of the gains in terms of index contribution on the FTSE 100 as well, Tom.
Yeah, really interesting to see the moves in the oil space, as you say. Ericsson, as we flagged, getting that lift up 5.9% or thereabouts on the back of that earnings beat coming through. We've been talking about the fact they've been driving through some cost cuts in that really challenging environment, but getting rewarded in the session today, so far at least, on the back of those slightly better results. On the downside, some of the names that are losing so far, just of course in the first 60 seconds or so, in terms of your individual names, you've got Brunello Cucinelli down about 1.7%, Direct Line, the insurance company, down 1.7%, Aberdeen also taking a bit of a hit. So the financial sector under a bit of a squeeze so far. But again, in terms of the gainers, you do have Ericsson near the top, Frontline also up there as well. And in terms of the sector basis, just very briefly touching on the European sectors, energy is at the top of the list, up 0.8%. Tech, as we've been talking about, down 0.3%, given the handoff from the US.
Did we mention Diageo? That does seem to be a bit of a mover this morning, negative, and Joe was right to point that out to us. A sell rating from Goldman Sachs, and as a result, we see it down. I mean, it's only down 0.3%, but it stands out today. So that's what we've got at the start of the European equity trading session. We've got European stocks going higher, up by 0.3%. The FTSE 100 up by 0.6%. Let's get a look at where we are on these markets and get a view on equities. Beata Manti joins us, European Equity Strategy Head at Citi. Beata, good to have you with us on the programme. Let's get your take on what did you make of, and I know it's a different geography, it's the United States, but I think it's important to think about our reaction function when it comes to data right now. We got a weaker than expected inflation print, or a lower than expected inflation reading yesterday, and that led to selling in stocks. Some days, and particularly around big tech, some days when we've seen weakness of that sort, it would lead to buying of big tech names because the market would assume lower interest rates. So what do you think was at play yesterday?
Absolutely. Different jurisdiction. Nonetheless, the data point is important for the equities worldwide, right? Because not so long ago, we were worried that other central banks around the world, because of the Fed being on pause for longer than perhaps some would like and some expected, would mean that other central banks wouldn't be able to go on with the cuts. So definitely a positive data point going forward. It brings alive the September cut. This is our forecast from Citi US economists, that the Fed will start easing in September. And in terms of the reaction yesterday from the US markets, it's what struck me really that all the underperformers of previous months have been doing best, and some of these rate cut beneficiaries have squeezed higher as well. So, very unexpected, lower than expected data point, and you had a knee-jerk reaction across the US market. Let's see what Europe does today, but going forward, if that's the data point that confirms actually we get the Fed to cut, and perhaps that means that the economy will remain resilient. They won't be so much pressures we could have if they stayed on bonds later on. That's a positive view for equities globally, right?
Yes. So let me ask you about that. So if the Fed cuts sooner than previously anticipated, Beata, in the US, that could be good for the broadening of sentiment perhaps around stocks. And is it good for broadening of sentiment around stocks into European stocks? Is that the strategy from here?
That's a good question. This was my view back a month ago, before these political tensions out of France have appeared. And yes, they are abating, but we do worry that geopolitical risks are going to continue going into the US election as well. And I'm not convinced that if Trump comes in and hikes tariffs on European goods, whether that's going to be very beneficiary for Europe. So what we've done, we've been overweight Europe for quite some time, and the immediate aftermath after the French election announcement, we've downgraded Europe to neutral, and we've upgraded the US to overweight.
How much of the currency picture matters, though, for either side of the Atlantic? We're talking about this long dollar positioning. We're talking about even strength, arguably, in the euro and in cable as well. Does that disincentivize some of the moves onto either side?
I think so. So dollar strength is definitely a risk, not necessarily for global equities, where the US equities make 70% of them, right? But it is a risk for international equities. From the point of view of the US investors, really, if you worry the dollar will strengthen, it will strengthen for particular reasons. Do you want to deploy your dollars elsewhere when you worry you're going to lose on the currency there?
When you're talking about that kind of fund flow story as well, though, what might make people shy away from the United States, specifically given the valuation conversation? Do valuations even matter right now, Beata?
Look, valuations are never a reason to buy or sell at a particular point, right? They need a trigger. They need a catalyst. Are the cuts? First of all, we want to see that this inflation, it's just one data point that we've seen yesterday. Is it enough to get the confirmation of the Fed pivot? Remains to be seen. It's definitely a good start, right? And if that's confirmed, and if that brings hopes of the soft landing back, then perhaps cheaper parts of the equity markets will get another chance.
But Beata, isn't Europe looking cheap? I mean, that's the argument. So you're neutral on European stocks, because we get many guests coming in here, and I know this is divided, this is a split debate, but there's the view that you have an ECB that's cutting interest rates, that growth is actually starting to pick up in Europe, and that valuations are looking cheap. But you say the politics overwhelms all of that.
In a way, this is one part of the story. In terms of valuations, I have slightly different view. I wouldn't say Europe is cheap. Europe was cheap 2-3 quarters ago. And the way we look at valuations is through our model for what is priced in for EPS by the market. And for Europe, back 2-3 quarters ago, my model was telling me that Europe was the only market out there globally that was pricing in an EPS contraction. Right now, after the rally we've been seeing, European market is pricing in, well, in line or slightly above the analyst expectations EPS over the next 12 months. So I would say it's fairly priced. Now, versus the US, of course, US pricing is much higher than the analyst expectations, right? So the bar going into this reporting season for companies to beat the expectations is much higher than in Europe. So on relative basis, definitely Europe versus the US is cheap, but it's not as cheap as it was on its own versus the start of the year or end of year. So focusing on fundamentals going forward. Have there been any cracks in the fundamentals? So we've been highlighting and worried about that. The moment the snap election has been called in France, earnings revisions, so the direction of the analysts' forecasts for Europe, but especially for France, have been going down very, very strongly. So it's not only a coincidence that we are going into the pre-reporting season and analysts tend to downgrade their year forecasts, right? We've had 3 months of upgrades, strongest upgrades around the world were coming out of Europe that was underpinning the rally. And now we've had a few data points that suggest some pressures or rolling over. Perhaps it's just a blip, but I'm watching that very carefully.
What you talk about the fundamentals and you have that preference for the US. To what extent is artificial intelligence part of that fundamental story? I was at a tech event yesterday and the debate was still live as to whether or not this is overshot and overrun to some extent. Where are the stocks that have not really benefited, that have that exposure, but haven't seen the flows, and that maybe there's a window there to add?
Absolutely. So in terms of AI, of course, the biggest impact on fundamentals come from the US. So just to put it into context, the US market is expected, so the analyst expectations for this year are for plus 12% EPS growth. Now, if we exclude from S&P 500 Magnificent 7, this plus 12% becomes plus 6%. So significant. It's not nowhere as big, of course, in Europe. In Europe, the EPS is broader.
Can I ask you about your expectations around the UK then? We obviously have more political certainty than we've had for quite a while in the UK now, given the size of the mandate for the Labour Party. I know that you prefer the FTSE 250, which is going to be more domestically exposed. I was interested, though, in some news we had this morning from the Investment Association saying in the month of May we saw a continuation of what's been an 8-year trend of retail investors pulling money out of UK stocks. Now, the retail sector is not the only thing that matters, and of course your calls are about something wider than that. But how do you look at the UK at this point?
Absolutely. So in terms of the retail flows, but also institutional flows, we've been seeing these structural outflows, not only out of the UK, but Europe only equity funds. And what has been happening is that these funds have been transforming into global funds. So we've been seeing inflows into global funds, decent inflows. And of course, Europe and the UK are beneficiary of these inflows there as well. So that's just a caveat to these outflows from the UK or European funds only. Now, in terms of the UK, we think the election is definitely a positive data point to regain investors' confidence. Rate cuts are coming. The economy is picking up. We've seen that in yesterday's data, right? And what is very important as well is the direction of the pound. I know you've been talking about that earlier. So stronger pound should be favoring this small and mid-size space within the market, and it is more growthy, it's more exposed to the rate cuts than FTSE 100, which is really pure value, so it doesn't have this sensitivity to the cuts, and it has bigger sensitivity to the weakness in the pound. Perhaps going forward you could expect some strength, right?
Okay, so you lean into the FTSE 250, maybe arguably over the FTSE 100 here in the UK, with that focus on small or mid caps. Are you seeing flows out of France? Would you expect to see flows out of the French market? And what would you need to see to kind of dip your toe back into French equities?
So our models, like regression models, suggest that the outcome, the political outcome we got out of the elections has been broadly priced in already by the end of the previous week before the election. But as I've said before, the biggest downgrades, and it's not only the direction of the analysts' forecast, but also the actual EPS for this year is coming down substantially for France, much more than in any other part of Europe. So that worries me, really. So the market is still not particularly cheap. Of course, it got cheaper. And I really would like to see some positive news on EPS and inflection points that these downgrades have, that are signs of these downgrades abating.
Okay, thank you so much. Thanks for joining us, Beata Manthi, European Equity Strategy Head at Citi. Let us get to the core six, shall we, Chrissy? Let's have a look at what we've got happening there in terms of market moves this morning. LVMH up by 1.3%. So to some degree, that continuation of the rebound in French stocks, given the heavy selling we saw around the calling of the election, seems to be one of the themes we're dealing with.
Yeah, one of the outperformers. We should mention ASML moving by almost the same margin to the downside as well, down about 1.2%. Novo Nordisk and Ferrari also higher by about 0.5%. So you are seeing some pretty decent moves in the mega caps as well. That is your large cap story. Let's get a check on some of the individual stocks on the move with Joe Easton. Joe.
So we're seeing Ericsson actually gaining around the most in 4 months at the moment, up almost 8% following earnings from the telecoms infrastructure firm, actually rising to the highest level since 2022 now, so recovering all of the declines that we saw last year. The orders actually coming back in the US, according to a note from Jefferies today. The Indian market, though, still looks weak, and that is a big business for them. But for now, the US orders, that AT&T order as well that Tom mentioned earlier, actually boosting those sales at the moment. A little bit of a read across coming through in Nokia as well. That one up around 2% over in Helsinki today. There's some other earnings to bring you. Another luxury one that is gaining at the moment. It was gaining when I was at my desk, but it's actually come down. Brunello Cucinelli over in Italy, the maker of fancy cashmere sweaters. They've got some numbers out today. They're heavily exposed to high net worth individuals, according to Citi, but that is not helping too much today because the stock coming down after those earnings. Got a couple of asset managers on the screen, but very different stories. Partners Group in Switzerland seeing some really good AUM at the moment, but assets under management in Ashmore, which is a London-listed emerging market asset management, actually seeing a lot of money flowing out of that, a negative sign for emerging markets, and that one's down 3% today. And over in oil, we've got Aker BP in Norway. They've got some earnings as well, but this is talking about projects, new projects in the seas out in Scandinavia, actually doing pretty well for them at the moment. So we're up 1% on that one. We'll check in on some of the airline stocks because this is a bit of a theme today and has been a theme this week. Airbus pretty much unchanged, not too much of a boost from news that Boeing actually seeing some potential further delays to 737 deliveries. Ryanair weakening though. Remember, Ryanair has a $40 billion order with Boeing outstanding at the moment, so potentially that is weighing on that. Then we've got Safran. This is a supplier to Boeing as well, we mentioned earlier, and Senior PLC. Keep an eye on those. Not too much movement, but worth watching airlines as well. We have also got another airline stock to bring you. This is Air France. It gets a downgrade today over at HSBC. HSBC cutting a number of airlines this morning. I think they've got a rating out on Ryanair as well, but they have got ratings on a number of stocks. We saw Delta Airlines in the US yesterday cutting its guidance. The sector fell, so it is a theme for the week. And then finally, Goldman cutting Diageo. Now, there's already 6 sells on that, but Goldman joins the sell pack on that one. Very slightly lower. The price target suggests some downside. The maker of Guinness, my favourite beer, is declining today.
Thank you very much, Joe. Joe Easton from our equities team with his beer recommendations and stocks on the move this morning. More from Joe later this hour. Coming up on the programme, though, we'll return to the serious business of global geopolitics and global security. Reports emerged that US and German security services foiled a Russian plot to kill the boss of one of Europe's largest arms manufacturers. We'll bring you the details shortly. This is Bloomberg.
Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
This is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the opening trade. Happy Friday, 21 minutes into today's session then, and you are seeing some very modest gains across European stocks, up 0.2%. As you can see, on an individual index level, some strength coming through for the FTSE 100, adding 33 points so far in the session, up 0.4% at 8,257. Also decent gains over in France. The CAC 40 actually up 0.5%, up 38 points. Really pronounced rotation yesterday in the US session from big tech and the semiconductors to the Russell 2000. We'll watch to see if that theme continues in the US session. S&P E-minis are currently flat. Nasdaq futures down 0.2%. Let's get to a really fascinating, intriguing, and frankly quite concerning story right now, because Bloomberg has learned that US and German security services foiled a Russian plot to assassinate the chief executive of Rheinmetall. It's a German arms manufacturer producing weapons for Ukraine, but for the rest of the continent as well. Let's, at this point then, bring in Bloomberg's Brussels bureau chief, Kevin Whitelaw, for the details on this. Kevin, what do we know about this assassination plot, how it was foiled, and what it tells us about Russia's intent?
Well, this is something that apparently the U.S. intelligence services discovered and then tipped off the German authorities so that the Germans were able to go and actually sort of stop it. We don't really know all the details, but they describe it as a reasonably mature plot. So it does seem like there was something at least somewhat, significant going on here. It's obviously an enormous escalation and quite a provocation from Moscow if this is indeed something that originated there, which is what so far the authorities seem to believe. So, he was put under protection, and they think they've at least stopped it for now. But if these details are confirmed, it really shows just a whole new level of sort of aggressive direct tactics against, in this case, a very key producer of weapons for Ukraine.
Kevin, this broke at the same time that you had world leaders gathering in Washington for the NATO summit as well. What was the reaction on the ground from this kind of multi-pronged approach from Russia?
Yeah, well, obviously, there's been concern about this. They've been talking about this for a while in a number of different NATO countries, particularly those that border Russia, the Baltic states, Finland, and others have already been warning about these kinds of hybrid attacks, whether it's what they call instrumentalized migration or other things, for quite a while. So Russia has been doing a number of things slightly below the radar aimed at disrupting and various countries. What I think this episode really shows is the reminder of the role that the U.S. and Europe play when they cooperate and work closely together. As I think a lot of NATO allies are really looking over the horizon to the possibility of Donald Trump winning re-election, there's a huge amount of concern about what that would do, both for the U.S. support for Ukraine, but also more broadly, the U.S. role for helping as a partner with Europe to defend its security.
Yes, and with that in mind, Kevin, we saw a number of European leaders, or at least their teams, trying to get in touch with President Trump's teams over in the United States during the NATO meetings to try and get a fuller understanding of U.S. policy options into next year, maybe under Biden, maybe under some other Democratic leader, or maybe under Trump. And Biden's performance then moved front and center, didn't it, for all of Europe?
Yeah, I mean, look, everyone was watching the press conference and trying to figure out how he was going to do. And obviously, this one went better than the debate, but there were those high-profile gaffes that he made. He confused his vice president's name. He misspoke when he introduced Zelensky. Those were pretty painful things to watch, given the context of the debate. If we hadn't had that debate, the press conference probably would have been a somewhat unremarkable moment, but we did. Everyone's looking for those moments, and Biden is simply unable to do something, to do enough, I think, in the days and weeks ahead to sort of erase the debate and really reassure people that he's sort of ready for another 4 years. It's an enormous task to rewrite that narrative, and it's just not clear what he'd be able to do at this point to sort of wipe that slate clean.
Yeah. Kevin, as we look back to the hybrid warfare question, Russia and its involvement, and you oversee, of course, this region that has seen a number of these hybrid attacks, it seems. What is your understanding of NATO's potential response? At what point they have to draw a line in the sand around some of these actions?
Yeah, I mean, I think that obviously NATO does have the sort of self-defense mechanism in the pact that can get activated, but it is something that sort of the allies have to agree on, and so at some point that becomes a decision that they'll have to take together. I think it would have to be something very overt, very significant for it to be a true NATO response. You are seeing NATO has stepped up very carefully in terms of its level of involvement with coordinating support to Ukraine, because it has not wanted to provoke a direct response, a direct conflict with Moscow. It's been a very carefully orchestrated thing. The EU took the actual lead in some of the logistics for a long time. Member states were doing things on their own. They're really desperate to avoid.
Kevin, we've got to leave it there. I'm so sorry. But Kevin Whitelaw, Brussels Bureau Chief, we thank you so much. This is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about, how do I take everything that I know and I've learned and actually do the opposite? And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, created, when you're solving a problem that's real for you and therefore real for the consumer.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
This is the opening trade. We're about 30 minutes into today's session, seeing green on the screen, higher by about 0.5% in the French index, actually, so seeing some outperformance there. But green on the screen for the rest of the markets as well, and that's going to be really interesting when we talk about whether or not this can actually sustain going into the next couple of weeks, especially, of course, as Europe and the United States perhaps takes a little bit of holiday over the summer months. For now, though, a little bit of positivity, not only in the stock markets, but in the FX markets as well, which brings us to what that actually looks like in terms of the ripple effects going into the dollar, the euro, the cable, the strength we're seeing in the currency market broadly. We asked Ralph Presser that very question earlier in the show. Take a listen to what he had to say.
The dollar is overvalued on any measure, right? If you look at the real effective exchange rate, it is at an all-time high. It does make sense for the dollar to start giving some of that up. What has been preventing that from happening until now is the fact that we had this uncertainty about when the Fed would actually start going. Remember, until quite recently, we were debating whether or not other central banks would be able to cut if the Fed doesn't. And that uncertainty now is meaningfully reduced. That will certainly help the dollar give up some of that richness.
Joining us now, Supriya Menon, head of multi-asset strategy, EMEA over at Wellington Management. Supriya, pleasure to have you on the program. Thank you so much for joining us this morning. The argument that Ralph was making is that the positioning going into the election right now isn't actually all that clear. Meanwhile, you are seeing potential strength in the European currencies that are looking to continue. How does that have a ripple effect in some of the other cross-asset story?
Yeah, absolutely. And just starting with those currencies and underlying that is are the rate parts. Major central banks have been fairly desynchronized. So we had the ECB moving ahead of the Fed. And what we see now with the inflation print yesterday, giving more confidence to the Fed to act, is that we potentially will see some resynchronization of those rate parts. And so while the dollar has been strong, you could see it giving up some of those gains. And we've seen the sterling strengthen, of course, and that also reflects the relative strength of the UK economy.
Well, that strength, though, how long does it last? Because, yes, it feels like it's a function of the UK economy's strength, but it also feels like it's a function of that political stability narrative that we are arguably just now seeing in the UK. But is that a knee-jerk reaction, or is that just kind of one that is actually going to sustain despite some of the issues and the structural weakness you still have in the UK?
Yeah, absolutely. And you pointed to a key weakness of the UK, which is that investment has been languishing, and that's gone hand in hand with so that's driven by weaker confidence, but gone hand in hand with, sort of lower valuations for UK assets and so forth. Now, the strength of the cyclical strength of the UK economy came through in the recent GDP print, and that, of course, preceded the shift in the change in government. And we saw growth come in well above expectations and well above the Bank of England's own expectations. So that cyclical momentum might well stay in place, and that actually challenges the rate cutting part for the Bank of England. So that cyclical strength is definitely coming through in the UK, and arguably stronger than what we see in the Eurozone and definitely in the US in terms of cyclical momentum.
Okay, cyclical strength in the UK. When it comes to the US, and the rotation that we saw yesterday was pretty pronounced in terms of from big cap tech to the Russell 2000 and those small and mid cap stocks. Does that continue? Was that a pivotal moment? Is rotation the theme now going forward for the US?
Tom, speaking of earnings, actually, we really firmly focused on earnings, and that sort of has driven the relative strength of the mega cap tech stocks, because there's been a big gap between the earnings that have come through from those larger stocks and the rest of the market. Now, when we look ahead, we see big cap tech moderating in terms of the earnings that they can deliver in the coming quarters, and expectations are for the rest of the market to close the gap with mega cap tech. And that means that earnings are broadening out, or expected to broaden out, and that would certainly be our expectation as well, which drives the view that you should see a broadening out of price gains as well across the market, and that would be a healthy development given the fact that looking backwards, we've had this very, very concentrated advance.
So would you fund a move into some of those broader name stocks? Whether that's a Russell, by selling down some tech at this point. Is that how you fund that trade?
At the moment, we would expect a broadening out. So we're positive on we expect some of the laggards to catch up. So be that small cap stocks, be that more cyclical areas of the economy. That's more the case in Europe, where we see stronger cyclical momentum. In the US, there's more of a mixed case for that. But generally, we see a broadening out beyond tech. So we'd expect some of the mid-cap stocks and small-cap stocks and some of those laggard sectors to catch up.
So, Priya, can I ask about this cyclical momentum in Europe and where that leaves expectations around rate cuts in the UK and with the ECB, I suppose, as well, even though the ECB has started cutting, of course, the Bank of England hasn't. What is the link there? Because we were talking in the last hour of the programme with Ralph Prosser from Bank of America, and he was sort of separating out the Fed's decision around the underlying strength of the US economy and rate cuts. He was saying it's not going to be a reflection of real weakness in the US economy. It's a different story. And I wonder how much that applies here. Even if we see a cyclical uptick, for example, in the UK, do we still get rate cuts?
Overall, we expect rate cuts to come through. So that's in the US and in the UK. Now, how does that affect, how does a recent cyclical upturn in the UK affect the Bank of England's rate path? We believe they're biased to cut, so they will cut, whether that's in August or soon afterwards. However, what that might mean is that you have, it is quite challenging in terms of managing sticky services inflation. So what you might get is quite a shallow rate path. And indeed, that's implied in rate expectations across the board, whether that's in the US, whether that's in Europe. So what you might get is a more shallow rate path, and that's exactly what we'd expect.
So that's the impact that cyclical upturn has, is they cut, but they don't cut by very much. We've clearly been focused on the politics here in the UK. We pass that baton across the Channel and across the Atlantic, perhaps later in this year. How are clients you talk to, investors generally, thinking about the US election? Again, we spoke to Ralph earlier, and he was saying the message he's getting from investors is it's too soon to trade the US election. You know, we've got a lot of rate dynamics and a lot of data to deal with before we get there.
Absolutely, and we are in an environment this year where 70% of the world's population have been involved in elections, and while we're firmly focused on valuation, earnings fundamentals, and so on, which are generally strong, that's why we're pro-risk. There is a little bit of a tug of war between political dynamics, geopolitical dynamics, and market strength and strong fundamentals. Now, in terms of the UK election, the US election, specifically, what we'd expect is, if you see a rising probability of a Republican trifecta, so not just Trump, but a united Congress, you should see the market moving towards probably, sort of a more inflationary setup. And that means an expectation of higher inflation and higher rates down the road. So that's what we'd expect to come through there.
I want to circle back to the cyclical story that you're talking about specifically in Europe. It feels like it's a very contrarian take from what we've heard on the show, because cyclical, and correct me if I'm wrong, implies that there's capex spending, that there's manufacturing strength. Aren't we seeing the exact opposite when it comes to the continent? So explain to us why, or where you're seeing evidence that this move in Europe is cyclical as opposed to defensive, not only in terms of kind of that technology read-through from the States, but actually defensive in terms of defensive stocks, bonds, et cetera.
Yeah, absolutely. In Europe, so it's focusing on the Eurozone specifically, the strength has actually been driven by the services side of the economy. So when we look at, and that's reflected in the regional makeup of that cyclical momentum. So the periphery has been stronger, they're more driven by services. Now, one of the things that we've been focused on is the outlook for the consumer in Europe. And the consumer has been actually, is in a good place. A strong balance sheet. They haven't spent down the COVID stockpile of savings to the same extent as we've seen in the US. and generally the labor market has been robust, and real wage growth is coming through. So the consumer should continue to drive strength in the euro area economy. Of course, there has been some disruption from some of the political dynamics we talked about earlier, but that drives a more positive view of the euro area economy. That being said, we are watching for any signs that some of the political disruption could also stymie some of the cyclical inflection that I mentioned.
You look at credit as well. You're overweight credit. What underpins that view, and has the window closed to kind of getting exposure to credit as we look at those potential rate cuts? Where within credit are you looking at opportunities?
Yeah, absolutely. So our positive view on credit is driven by the carry. So we expect spreads to remain tight. They are tight, but we'd expect to remain there. And so that carry really drives our outlook. And this is also driven by the fact that we believe that, sort of the default cycle has topped out, and also by some positive technicals for the credit markets. For example, the size of the market has shrunk.
Do you have to carve out France and French credit from that broad overweight on European credit? Do you have to sideline France?
No, actually, there are opportunities, for example, in French banks. And we'd expect that European credit should be well supported. And there is, in fact, some more spread compression to come through in European credit specifically. Not necessarily the case in the US, but that drives our overweight view on European credit.
As luxury French stocks doing pretty well today, which is interesting. The CAC 40 outperforming a little bit, up 0.5% on that luxury theme. Big luxury buyers, of course, in China in better times, maybe not quite up to it on the Chinese consumption front at the moment. We're going to focus quite a lot on China next week. We're going to get lots of data out, GDP, for example. You're pretty neutral on China at this point. What do you need to see to change that view?
Yeah, so in China, the main headwind has been structural. So on the one hand, you've had policy fail to put a floor under the property market, and that's meant that those structural headwinds have not been, in a way, managed through policy action. And that's meant that the private sector has been really, really weak. And confidence has been low, and we don't see that coming back. So we need to see, the cycle improve from here in order to turn more positive, but also the structural headwinds make that a little bit more difficult. And we are in the third plenum period, and the messaging that we're getting is that the focus is firmly on stability and the long-term policy goals rather than immediate policy action.
Yeah, that important meeting, as you both suggest, happening, of course, in China next week. So we'll see if anything consequential comes out on the policy front. Supriya, thank you very much indeed. Supriya Menon, Head of Multi-Asset Strategy, EMEA at Wellington Management. Coming up, it is, of course, a huge weekend for sports fans. We've got England taking on Spain in the Euro finals. We're going to talk the business of sport and preview one man's intrepid trip to Berlin, Joe Easton, for the match. That's next. This is Bloomberg.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977, when by then I had a little research station, and 4 of my students were kidnapped, and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
Welcome back to the opening trade, Friday morning, 8:45 here in London. And we see stocks in Germany are pretty flat this morning. The CAC 40 outperforms, up by 0.5% this morning. Luxury names over in Paris doing pretty well. Let's turn our attention to European politics. Manfred Weber, the president of the European People's Party, says he's confident that Ursula von der Leyen will be confirmed for the second term at the head of the European Commission. She faces a vote in the European Parliament next Thursday. Back in 2019, she scraped through by just 9 votes. Weber spoke exclusively with Bloomberg's Max Ramsey at the European Parliament in Brussels.
I'm very confident for next week. So we are collecting now support among the other political families. As EPP, we are the winner of these elections. We gained seats. We won again these elections. And we nominated beforehand, before the elections, Ursula von der Leyen as our Commission President candidate. So it's also a very democratic approach how we do things. We show in transparency what is our content and what is also our lead candidate for the future. And now it's up to deliver. And we want to have a democratic Europe. That's why the European Parliament should really support the lead candidate from the biggest political family, that's the EPP.
And, I mean, when we talk about having support and delivering, I mean, do you think that you have support, for example, from the Greens? Have they indicated to you that they are willing to support Ursula von der Leyen?
We have also on council side a clear commitment between the 3 main political groups in Europe. That's the Christian Democrats, my party, the EPP. We have the Social Democrats, and we have the Liberals on European level. Probably also linked to the big leaders. We have Olaf Scholz, we have Emmanuel Macron, we have Donald Tusk. They are representing all the political families of Europe, and they agreed together with the parties that we have a common package to create stability for Europe. After the elections, Europe must be grounded on the stability in the center. That is what Europe needs in this moment of time. I am happy that we reached this agreement with Costa on the council side, with Kaja Kallas on the High Representative, and with Ursula von der Leyen as next Commission President. And next week we have to deliver as parliamentarians on this kind of key promise. We have so much uncertainty, so much instability all over the world. Look to America, what is there, what are there the discussions. That's why I think it is our task now to create stability in Europe.
Manfred Weber, their president of the European People's Party, speaking to Bloomberg. A couple other things to watch on the docket for today, and of course going into the weekend, is 1:30 p.m. UK time is that U.S. PPI data. Remember, it comes right off the heels of that negative print in headline inflation in the States. Will we see a similar reaction in the bond market, the 12 basis point move we saw yesterday in the front end of the curve as well? 3 p.m. UK time, all about that UMich consumer sentiment data as well. Just one more data point to add, and of course, I think starting early in the U.S. morning, I want to say around 8 a.m., you're going to start getting some of those Wall Street bank earnings. Citi, JP Morgan, Wells Fargo, BNY Mellon, all hitting the tape, Tom, when it comes to kicking off earnings season on both sides of the Atlantic.
Yeah, it's going to be interesting, isn't it? And Charlie Wells set us up really nicely in terms of what to watch for when it comes to the bank stocks, of course, with those numbers dropping later today. So we'll bring you all of that. We're going to switch focus right now to the event of the weekend, though. England's men's team, the women did it, they won. Now the England men's team need to catch up, step up to the bar. The football team, of course, will take on Spain in the UEFA Euro 2024 final in Berlin on Sunday. who better then to bring in Joe Easton from Bloomberg Stocks team for this? With a focus, let's start before we get to your epic journey, because you're going to be heading over there, Joe. We're all slightly envious of that. I certainly am. But before we get there, in terms of the stock market importance of this, you're looking at some names that could move on the back of this, a potential England triumph or potentially Spanish triumph. What happens? What stocks are you looking at?
Yeah, well, I mean, less of the Spanish triumph.
Yeah, let's keep that.
Shall we just acknowledge the fact that this is an entirely biased desk? Pretty is doing her best to support Spain.
Exactly,
I'm sitting way over here on her best.
Yeah, exactly.
So yes, anyway, that said, we acknowledge our bias. Now moving, yes, Joe.
So there's been some interesting research out done from some analysts. I think they have a bit of fun with it as well. So they there's a note from Morgan Stanley talking about how when England do well in tournaments, you see a very clear increase in pub sales. So it's not just England being in the tournament, but when they actually progress further, the gain to pub volumes is actually bigger. And then you can also see some data in the hotels over in Germany. So in the third week of June, the average cost of a room in Germany was around 30% higher than the weekly average, because there was 24 teams in the tournament at that point, so 24 different countries all trying to buy hotels in the same place, and of course the prices go up. So there is clear research done on the market impact.
So there we are, that's tick, but lots of sensible business commentary. Let's think about the politics and how this might play out. Keir Starmer, new leader in the UK, has been at the NATO summit, and a lot of people have been trying to get his thoughts on the game, because he is, of course, a big football fan. And also, there's rising expectations. Will there be some kind of celebration on Monday if there were to be victory? But he doesn't want to tempt fate.
Yeah, so there were some reports in London press about a potential parade, so something to look forward to if we win. But obviously, we've still got the game to get through. But yeah, no, he is a big football fan. It's not kind of often politicians when they talk about football, it is kind of just to get in the headlines.
He plays five-a-side.
But he plays five-a-side every week, so he's been known as this.
He's a legit football fan and of the best type, because he's an Arsenal fan.
Arsenal, unfortunately.
He gave President Biden.
I saw that. Yeah, I think that was quite cool.
Nice gift. I'm sure that's on the wall in the your White House.
Can we get to the important stuff, which is how did you get a ticket?
Yeah, so I've been.
And also, are you taking me?
Well, yeah,
you're on the spot now, Joe.
I'll speak to my contact. So no, I've a great friend of mine, Simon. I'll give him a name check because he's a long-suffering England fan, and I've been to a couple of games with him over the years. So he's managed to get me a ticket. So shout out to Simon. But yeah, I've got to go on a travel all around Europe to get there. I've got to fly to Prague and then get a train from Prague into Germany and then another train into Berlin, and it's costing me a fortune.
So there are no flights? The flights are all booked up?
Every flight in and out of Germany from London is completely booked. And I can't actually get back until Tuesday because there's no flights until Tuesday. So I've then got to get a train to Hamburg and fly from Hamburg to London. So,
wow.
So if the producers are listening, I won't be here.
You won't be here on Monday. That's what. Yes, and you're blaming the travel.
Yeah, I'm blaming the travel.
Yeah,
exactly.
Shame that, isn't it? Shame you can't get back. I was listening to lots of reports yesterday talking about the cost of it all, and I was thinking, those poor people who are having to pay so much money to go. And
It's all my life savings, but it'll be worth it.
Very small violin at this point for Joe. Given you've actually got a ticket, you're going to be in the stadium.
But what if we lose? And I've spent
aren't you also a Spanish speaker?
I am a Spanish speaker as well, so
you maybe kind of slightly win?
Yeah, mucha suerte los españoles. I do a bit of showing.
We've done our bit.
Showing off.
Support both sides.
Show off while I'm here as well.
Wait, Joe, your mate Simon, how did he give us the insight? How did he get this ticket then? Can we? Is the window still open for these things? Is this a black market job, Joe?
Well, no, I tried on the black market. No, I didn't really. But so he's built up loyalty points over the past 2 years, from being a long-suffering fan. And,
58 years of pain is what
that's
BBC
it.
is.
And then
loyalty
get in.
points.
Yeah, exactly. But I'm happy to be. Well, I'm buzzing, to be fair.
Do you have a prediction for us? A prediction?
My prediction, I'm going to go with 2-1 England. Yeah, 2-1 England, 2-1 England.
2-1 England.
2-1 England.
All Tom wants to know is, will there be extra time and penalties? Because that will be painful for him on Monday morning.
I think our midfield might be a bit uncertain. We've got to go up against Rodri.
Yeah.
Yamal's looking good. We might be overrun. But if the way our attacking players played in the last game. We look like we can beat anyone. We look like we can score against anyone. We look like the best team in the tournament for half an hour.
On that first half an hour.
I was about to say,
for half an hour.
Yeah. Let's not get excited. It was more towards the end, and no one saw it coming.
But I think if we play like we did for that half an hour, it was only half an hour. But if we play like that, then we can win.
It was like the 90th minute.
Yeah. Well, yeah. We might need a last minute goal again.
All right. Bloomberg's Joe Easton going to come back and give us the full read through, plus souvenirs, of course, for everyone.
Incredible sacrifice that you're doing this reporting for us. Thank you so
really
much.
Taking it hard. We pity the man. And to go from what's going on in the weekend, let's actually bring it back to what's coming up later today, and that is those Wall Street earnings stories. You have J.P. Morgan, Wells Fargo, Citi, BNY Mellon, all going to be talking about not only in the terms of loan losses, in terms of the cushion that they need, but I'm really curious, of course, of Jamie Dimon and BNY Mellon talking about what we're seeing in terms of these rate cut bets. And Jamie Dimon has been a very big advocate of the economy. I'm curious whether this inflation print changes his view.
You managed to get market plumbing in earlier in the show, so that opens up an opportunity when you talk about BNY Mellon. Yeah, look, to what extent is investment banking coming about, the trade, the capital markets? To what extent is that going to be a propellant for these stocks that, as we've said, have done so well, outperforming the overall index year to date, most of them? Is loans going to come through as well? The consumer is part of the mix. There's a little bit of pressure there, but if rates come down, does that help the consumer?
Yes.
So positioning the gauge across the economy as well, really important.
I like the attempts of the team, and particularly around the table, to bring us back to the focus on markets. It's excellent. But there are other things.
You're the anchor.
I know. Normally I'm extremely sensible, but it's Friday, and we are looking ahead to. There's also Wimbledon, isn't there? There's lots of sport.
Let's not forget Wimbledon's fast.
But it's also a really busy weekend of weddings, I'm told. Now, this is not my specialist subject, but I'm told that celebrities of all types from the worlds of fashion and sport are expected to join the biggest names in global business. This is what I was getting to, at a lavish family wedding thrown by Asia's richest person. This takes place today in India. Months of celebration have led up to this. I mean, this looks like this is rivaling a Davos, isn't it? The people.
$320 million.
Do you also have an intense travel schedule this weekend?
I am not going to the Ambani wedding. No, that is not the big reveal at the end of this. I hate to disappoint.
You're one of the celebrities.
I obviously didn't try as hard as Joe Easton did to get hold of that England Spanish ticket. But it is incredible, isn't it, that this has become, of course it's a wedding, but it also seems to be a gathering of some incredibly wealthy and influential people.
Well, we should just put this into context. This is a cultural thing that in Indian weddings, everyone invites not only everyone they know, they invite business contacts. I mean, but they invite business contacts. Yes. I mean, this is quite normal even in not billionaire weddings, is for Indians to do that. So it's not that surprising that they're inviting people that they are looking to grow and build partnerships with around the world. So.
Yeah. And when you're an Ambani, you do it in some style. That is it for the opening trade. Back to the markets, and European stocks are up by 0.2% this morning. France outperforms. The pulse is up next. This is Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
Was going to keep reading World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
President Biden vows to remain in the presidential race, but two crucial gaffes at the NATO summit deepen concerns about his abilities. U.S. inflation cools to its slowest pace since 2021, fueling bets that the Fed will cut interest rates at least twice this year. Plus, Tesla postpones its planned robo-taxi unveiling to October in a blow to Elon Musk's autonomy drive. So good morning, everyone. Happy Friday. Let's take a look at the European markets, Matt. But there was a little bit of a slowdown, certainly when you look at indices in the U.S. yesterday.
Back in November, you had a message to us. You told us to sort of go for ourselves. So maybe we start there. Why?
Well, I meant
it's a serious question. It's a serious question. Yeah. Why did you say that, and what did you mean by that?
Well, well, first of all, it wasn't it wasn't to the advertisers as a whole. It was with respect to freedom of speech. I think it is important to have a global free speech platform where people from a wide range of opinions can voice their views. And in some cases, there were advertisers who were insisting on censorship. And at the end of the day, if there is censorship, if we have to make a choice between censorship and money, censorship and money or free speech and losing money, we're going to pick the second. We're going to support free speech rather than agree to be censored for money, which is, I think, the right moral decision. Now, of course, advertisers have a right to appear next to content that they find compatible with their brands. That's totally fine. I think that's again a choice of an advertiser to appear next to content that they think fits with their brand. That's totally cool. But what is not cool is insisting that there can be no content that they disagree with on the platform.
So like other media proprietors who want to run the editorial policy of the company, you feel,
yeah, I mean,
you shouldn't be under pressure to make that compromise between money and freedom of speech.
Yes, I think there's an important distinction here that we don't want to take money to censor.
Yeah.
That would be to censor broadly in the platform. I think that would be wrong. I think free speech is the bedrock of democracy, and if the people, in order for X to be the public square of the world, it's really got to be a free speech platform. Now that doesn't mean people can say illegal things. It's free speech within the bounds of the law, but not going further than the law for a particular country. I think it's imperative that the people have a right to speak. But by the same token, advertisers have a right to appear next to content that they feel is compatible with their brand.
Yeah, and that's the brand safety question, which
right.
I'm going to ask you next, which is, to be clear, you do understand and believe in brand safety in that sense.
Yes, I mean, I believe in a sort of freedom of choice in the sense that advertisers have a right to appear next to content that they think is compatible with their brand.
Yeah.
You know, sort of a company like, for example, Red Bull will be probably more adventurous than you know, some other brands that are selling baby toys.
President.
I think the next weekend is crucial, and I think there have been a lot of Democratic representatives, senators who have been holding back because of the NATO summit. They did not want to embarrass the president before that. And I think there is an expectation that the dam will break and there'll be a flood of additional Democrats coming out calling for him to step aside. So I think this weekend is crucial. What you saw from that performance, though, last night was that he is defiant. He is determined to stay in, but he has to sound that way. Any hint that he might be considering stepping aside, and then it's game over.
I mean, does this all overshadow also, some of the work that NATO is trying to achieve? Does it actually, until it's resolved, does it overshadow everything the president is trying to touch?
I think in terms of the NATO summit, it went very well. I think it overshadowed the summit insofar as various other world leaders were asked to defend Biden. But they reassured Ukraine, probably not as much as Ukraine wanted. There's no clear timeline for Ukraine to join NATO. And I think you saw the pictures of Zelensky last night looking disappointed, probably because there is no clear timeline, in addition to being referred to as Putin. But I think the substance of the foreign policy is still going forward. There is still strong support for Ukraine. There is still a tough position on China. I don't think that's not being really undermined.
Stephanie, you're also like a newly minted author, right? The book Punishing Putin is coming out in September. Disclaimer, I pre-ordered on Amazon.
Excellent.
So that is good news. But there was this, crazy story yesterday about, some of the allies foiling this Russian plot to kill the chief of the German defense company, Rheinmetall. I mean, what does this tell us about Putin's state of mind?
It shows that, he has been running this hybrid shadow war for years now, but it looks like he's really stepping it up. He's faced with a united NATO and increased military aid to Ukraine, and he's determined to try to undermine that at every step of the way. And I would expect more from Russia on that front. That sort of, KGB, FSB operations in Europe to try to divide and target defense industries that are funding and providing weapons to Ukraine.
Stephanie, thank you so much. Stephanie Baker there from Bloomberg Investigations and, of course, author of Punishing Putin. Now, to talk about the market implications of all of this, but also some of the data that we had yesterday, U.S. inflation cooled broadly in June, driven by this long-awaited slowdown in housing costs. Now, let's talk to Morgan Delladonna, Global ex-head of investment strategy in Europe, and Bloomberg M Live's Christina Kina. So thank you both for joining us. Christina, it's very clear that it's Biden, Biden, Biden. It's our most read stories. It's what people are talking about. Is there a market reaction to this, or is it just too soon because we don't know if he steps down who could take place?
Yeah, Francine, that's exactly it. It's too soon to really know or get any certainty in terms of what happens if he does step down, because there are still several steps and several months, really, until we get to the election. But rest assured, though, traders are, in fact, looking at this, and there's probably potential for some kind of knee-jerk reaction, depending on when we might get the news, if we get the news, right? It is usually likely for these sorts of announcements to happen outside of market hours, which is going to be incredibly inconvenient for any of us watching markets. And so, you would probably expect some kind of initial reaction probably happening perhaps in currency markets. They're kind of like the first port of call when it comes to big political upheaval such as this, potentially. But moving on from there, in terms of the concrete implications, where does it take the Democrats? What kind of policy would they try to sell to voters come November? And how does that stack up against the Republican Party's own policies? So many questions up in the air. You can imagine investors kind of wanting to watch this, but not necessarily acting on it until there's more certainty.
Yeah, they're also very busy with the Fed. We had that inflation print. Jay Powell, Morgan, wanted a good inflation print. He got it, and now the market is pricing in a cut in September.
Yes, it's very interesting to see that the market is still like falling into the same optimism that we saw earlier this year. Every time there is a positive news, there is kind of an over-optimism around it. And looking at the details of the report, you can see that, yes, this is good news because even shelter indices, so probably like more domestic inflation, is slowing down, but it's still well above target. We are 1 point above target. And meanwhile, we are seeing other developments outside the US that could threaten the inflation outlook. Looking at freight costs, for example, they have almost quadrupled since November. This could translate into higher PPI numbers today, but even like a strengthening trend in higher production costs, which ultimately will weigh on inflation. So yeah, I think that's something to watch.
Yeah, Christina, we saw this, very quickly. We saw this massive rotation actually yesterday. Is the market getting ahead of itself?
I mean, that's always been a question, especially for equity markets, right, Francine? There's always been such worry, despite the fact that we've seen, how many record highs for the S&P 500 this year? I think it was 36 last time I looked. But there's always been this worry that couldn't possibly last very long, right? There's bound to be some kind of pullback here. And so now that we're kind of like seeing more input in terms of inflation, potentially buoying treasuries again, it seems like some market participants definitely taking the opportunity to rotate back into fixed income from stocks.
Great, thank you both. Christina has to head to radio before the executive producer wages war on me. Bloomberg's MLive, Christina Kino, and Morgan Belladonna, Global X's head of investment strategy in Europe, stays with us. Coming up, 3 U.S. banking giants kick off the earnings season later today. More details on what investors will be looking out for next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome back, everyone. Now let's return to Morgan Belladonna, Global X's head of investment strategy in Europe. Morgan, when you look at, thank you so much, first of all, for sticking around, but we're talking a little bit about inflation and the fact that maybe the market is getting a little bit ahead of itself because it was one inflation print and finally they're saying, great, the war is over against inflation. Is there a danger that actually they have to reprice if we're starting to get, pressures, as you were mentioning, in certain parts of the economy?
I think what really takes center of the stage now is politics and how that could have implications on the inflation outlook, especially if you look even beyond the US. The rise of populism, the threat of higher tariffs, that could really push inflation upward globally, and the US wouldn't be immune to that. So even like beyond the US, there is a threat to this inflation trend, but also domestically, depending on the outcome of the presidential election, higher protectionism, higher tariffs, possibly extension of the tax cuts and job acts from 2017 beyond 2025 could have implications on the fiscal stance and lead to higher rates as well, but also stimulate the economy to a point that inflation is not actually going back to 2%. So for all these reasons, I think that the window is closing in terms of when the Fed could act. The market seems to be pricing 2 rate cuts, which seems reasonable, but I don't think that the Fed would have time to go much more than that.
Yeah, I mean, the concern is also unemployment, right? Unemployment got to 4.1%. Like, are we going to see this kind of like protracted, take up in unemployment that warrants a cut?
Yes, but looking at historical levels, even if yes, there is an uptick in unemployment rate, it's still 4.1%, which is quite low considering like a longer time frame. And at the moment, activities in the manufacturing sectors, in services, are still in the expansion territory. So there is no real material threat to the US economy, apart that, yes, there is a slowdown, but not something dramatic. So I wouldn't expect a sudden and significant easing cycle.
Morgan, thanks so much. Morgan Deladonna, their Global Access Head of Investment Strategy in Europe. Now, let's also talk about U.S. banks. Of course, there's a big crossover because what's happening in the economy and how bank shares perform. Shares of the biggest U.S. banks have been on a tear this year, with all but Morgan Stanley outpacing the S&P 500. Now, J.P. Morgan, Citi, and Wells Fargo kick off earnings season today. So let's get more from Bloomberg's Jenny Serang. Jenny, I mean, after years of benefiting from these higher rates, banks have to readjust to this, possible lower rates. How will that show up in today's earnings?
I think there's a few things that we're looking for. So the big number for them, as usual, is net interest income, which is basically a measure of how much income, how much interest they're generating from loans, but also shows how much they're paying out to depositors to keep them happy. Banks have been saying for a while now that for years and years that measure was actually benefiting from higher rates. Now rates have been so high for so long, they're facing a lot of pressure from customers to pay up or they're going to leave, and it's also starting to blunt loan demand. And so we're expecting that number today to not look so hot for these banks. In some cases, it'll be at its lowest level in many, many years. And then I think kind of on the go-forward basis, we're really looking at their outlook. So basically quarter after quarter, a lot of these banks have brought that down and have basically said, net interest income is not the generator that it was just a few quarters ago. So I think we're just looking for more and more commentary around how they're kind of navigating this environment.
What do we know about the investment bank fees? So again, what does it tell us about this recovery, in the capital markets?
I think, the U.S. seems to actually be doing pretty well in terms of that revival in deal making and a little bit better activity on the capital market side. So we should see good numbers today. That being said, it's all compared to a year ago when things were still in the doldrums. So you might see these huge increases. Like I think Citigroup, for instance, is expecting like a 50% increase or something, really insane like that. And if they do, end up putting that up, that's great. But it's really on a comparative basis, not that great because it's still a long cry from where we were just a few years ago and obviously in the kind of normal years leading up to the pandemic.
And Morgan, it's actually quite interesting when you look at U.S. economy and U.S. data to look at the banks because they almost have a more immediate view on what they see in like loans and loan books and also their customers.
Yes, absolutely. I think what we're seeing also in the market is the high performance of banks, but markets is really looking for a new catalyst, and the banks will have a tremendous impact on the rest of the economy in terms of stimulating new investments. So the rates for consumers will also impact the trends on the housing market and ultimately shelter inflation. So yeah, it has a massive impact, but in terms of other catalysts, we're seeing that the market is really focused still on AI and tech to give this new breadth to break the recent records.
What can you tell us, Jenny, about regulation? So the big U.S. banks have been really pushing back against some of the new capital rules known as Basel III. Only on Friday mornings do we talk about Basel III that are supposed to be implemented this year. So what can we hear from them? But we also, Jay Powell in the testimony kind of seemed to suggest that maybe they'll be watered down.
Yeah, I think that's right. So a lot of the commentary we've gotten from the regulatory side has been that it won't be as onerous or it won't be quite as bad as banks originally had feared. I still think we'll hear a lot of complaining from them today. And I think it gets to your point, actually, about kind of the health of the U.S. consumer and what this says about the economy. When banks were making these arguments, a lot of their argument was about, if you put these rules on us, we won't be able to lend. We won't be able to be kind of there for consumers in their times of trouble. You could say, I guess, that it seems to have worked based on some of the recent comments out of Jay Powell and others. So we'll see. I think it's still many, many months away from being implemented, but I think we'll still hear a lot of complaining out of these banks today on that front.
Yeah, I'm sure we will. We'll be watching very, very closely. Thank you both for joining us. I was Bloomberg's Jenny Serrain, who covers, of course, who's in charge of bank coverage for us, and Morgan Deladon from Global X. Coming up, Tesla shares tumble after reports its much-anticipated robo-taxi is stuck in traffic. We have the latest next, and this is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down that path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
Event.
But is this, so, you know, it's either because he wants perfection or it's because he's far behind schedule?
Well, and I think one of the interesting bits of detail that we got into yesterday's story by Dana Hull and Ed Ludlow is this idea that the design team, even just this week, was essentially told to redesign elements of this car. So I think that speaks to this idea that this is not a matter of you know, trying to perfect things, but that this is like, you know, not a fully baked vehicle. And so there needs to be more work done. It also speaks to a likelihood that this isn't going to be a case where they show it and then boom, this thing is out on the roads. It's going to take them some time to get this to where it's road ready, and you know, putting aside even that, a real open question of when these cars can actually start generating revenue by doing rides the way, say, Waymo is doing in San Francisco.
We have a 1 month chart. It's crazy. You were telling me that actually, I think, you know, it's gone. So we have a 3 month chart, but you were telling me in the last month it's kind of like gained 260, you know, billion market cap. But what's incredible is also on the back of this robotaxi news, it moved Uber and Lyft.
Yeah, it's very interesting. There's been a lot of you know, attempts on the part of analysts and investors to sort of get their arms around to what extent would a Tesla robotaxi be disruptive to an Uber or a Lyft, because what Musk has talked about here is trying to build a fleet that Tesla itself would run. And that sounds a whole lot like what, you know, Travis Kalanick wanted to do way back in the day. So whether or not they can actually pull that off, I think is an open question. But it is something that could
watch this space.
Exactly.
Names in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that, moniker, but it's not the same intelligence that I have.
Especially I'm afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. President Biden vows to remain in the presidential race, but two crucial gaffes at the NATO summit deepen concerns about his abilities. U.S. inflation cools to its slowest pace since 2021, fueling bets that the Fed will cut interest rates at least twice this year. Plus, Tesla shares fall after it postponed its planned robo-taxi unveiling to October in a blow to Elon Musk's autonomy drive. So let's return now to the NATO summit, where U.S. President Joe Biden has vowed that he will remain in the 2024 presidential race despite two critical mistakes in the span of 2 hours, deepening concerns about his mental acuity. Now, for more on this, we're joined by Sarah Bufkin, Associate Professor at the University of Birmingham, and Bloomberg's Kevin Whitelaw in Brussels. So thank you both for joining us. Kevin, let's start with you. Is there anything that Biden at this point can do to actually move the needle in his favor?
It's just getting harder and harder. He's gotten into a cycle where every single moment, everyone's looking for that thing he's doing wrong, rather than sort of looking at the overall performance. And so his performance in the news conference was reasonably good, except for the one or two sort of major gaffes he made when it came to misnaming people close to him. So that's what people are going to focus on, and it's really not clear what, if anything, he can do in the coming days and weeks to sort of actually allay the people's fears that he, may not have the sort of mental acuity to make it through 4 years of being president. No matter how many times he says he does, no matter how many times he comes out and makes cogent arguments, all it takes is one or two moments to sort of undo sort of any progress that's been made.
Yeah, and Professor, this is a problem, right? Is that actually it was a good foreign policy speech, but actually, his gaffes instantly became viral. They became memes. So does this just get worse and worse?
Yeah, it's hard to see how, given the ways in which social media has really changed how a huge swath of the American populace consumes their news and interacts with political figures today, how Biden is going to be able to kind of put out the fire. His campaign, for as well as they prep him, for as much as he speaks eloquently about the war in Ukraine, for example, those don't make TikTok videos, right? And it becomes very easy to pick out the few instances in which he misstates someone's name, loses his train of thought mid-sentence. Sometimes it seems like he's almost like stumbling over his words. Those on TikTok play incredibly well for the Trump campaign, and that's why they really want him to actually stay in the race.
Kevin, does this change the polling around Democrats versus Republicans?
Well, it's obviously hurt him in the polls to some degree. The exact amount is a little complicated to figure out. I think the bigger problem, even in the polling, is just sort of that enthusiasm question. And so much of the ultimate, sort of margins in these swing states is really going to come down to who comes out and votes. And so if there are just these really lingering concerns, it may just dent the ability and the willingness of people to go out and pull the lever for him. And so it actually makes the polling side of it pretty hard to track. At the same time, the sort of anti-Trump vote still is a pretty motivated one. So there's still a fair amount of energy there. And I think the actual deeper problem for the Democrats is they could try to switch somebody in. It's just not clear, even if they did, even if Biden somehow decided he was ready to step down, it's really not clear that there's enough time for anybody else to build the momentum and really change this around.
Can he stay in the race, Professor?
He will. If he decides he doesn't want to leave, it would take there's no institutional procedure for removing him at this stage. I mean, you can contest the convention. The last time that happened, it was a huge mess for the Democrats. If he wants to stay, it's very difficult to push him out. I think the only ways that that could really work is if people close to him, as well as the Democratic congressional leadership and the Democratic donor class, say we will kind of withdraw support. And at this point, the anti-Trump vote is so strong that I think there's still a chance they could rally behind the broader administration as a project rather than behind the man.
But Dr. Bufkin, I mean, who does he listen to? Again, I know his wife is kind of, in certain circles portrayed as Lady Macbeth. I mean, it can't be all up to her. Does he listen to senators? Does he have an inner circle? Does he listen to allies?
I mean, he certainly does have an inner circle, and I think that inner circle has circled the wagons in the last week. A lot of it's family related, but it's also aides he's relied on since the beginning of his Democratic career, so going back 30, 40 years. But at this stage, I do think that, he's given indications and people close to him have given indications that if the polling numbers really change, and they have shifted since the debate, but not significantly. They've changed about the same amount that they changed against Trump when he was convicted of his felonies. But if Biden really starts to believe that he doesn't have a route to victory, I think he could potentially be more motivated to step down. But at this stage, the polling data is not giving us that, and particularly when you think about the question of turnout, this is going to be a turnout election in key states. We saw that with Hillary's loss to Trump in 2016, and currently Biden's projected path to victory that his aides are pushing for is going through some of the swing states that she lost on turnout issues.
Kevin, how do you see this playing out? I know this is a big question, but and why is he staying in the race? Is there really a fundamental belief that he thinks he's the only one that can beat Donald Trump, or is it a rivalry between, with previous presidents that had 2 terms?
No, I mean, I think most of it is in 2020, he was absolutely convinced that he was the best person, maybe the only person poised and positioned to be able to beat Trump, and he won. And I think he's gone into this election with the exact same, calculation. I think some of the aides around him, his family, may also be thinking about some of those broader legacy issues, and there even may be this calculation that this is part of what keeps him going. It's part of what keeps him motivated, is this job and this mission that he's got. So, I think it's all wrapped up in all of those things. He thinks he can beat Trump because he did it once before. I think the problem is you've got more and more Democrats, more and more donors disagreeing with him at this point. And for every one more person you have coming out and saying it's time for him to step down, those are clips that, should he stay in the race, the Republicans and the Trump campaign are going to play again and again and again, and it's going to just make that narrative even tougher for Biden as the election nears.
If he were to step down, Sarah, when's the right time for him to do it, to enable, a new candidate to come through? And is it automatically the vice president?
It's not automatically the vice president, and I think it shouldn't automatically be the vice president. I mean, we're really in an unprecedented territory, so the Democratic Party would actually have to figure out at this stage what would be the most democratic, deliberative, and inclusive way to decide on a replacement nominee. At this point, if he's going to step down sooner rather than later is obviously the time to do it. If you get to the next debate shortly before the election, at that point, it'd be very difficult to put forth an alternative Democratic candidate that had anything like the buy-in of either the party or a broader electorate.
I mean, this NATO summit, Sarah, had to go well for, I guess, NATO and allies. Are we going to see more pressure now that it's over for him to step down?
I think so. I mean, it's interesting, too, to see where the pressure is coming from. It's largely moderate Democrats in contested seats. The Congressional Black Caucus still remains largely, not sort of full-throatedly, but behind him. And so I do think now that all the attention is off of Biden in the U.S. during the NATO summit, we'll see more people coming out of the cracks, particularly on the House side where they're running for re-election this year. Will it be enough?
And Kevin, how many people are asking whether he's fit for president now?
Well, I mean, I think a lot of people are, whether they're doing it in public or doing it in private. I mean, throughout that whole NATO summit, every NATO leader would have been paying extra close attention to it. They both want to figure out how he's doing, but they also were trying to figure out, is he good? Does he have a chance of pulling out an election victory? For NATO, for the allies, this is a very important election. The fate of Ukraine potentially hangs in the balance. It's not clear at all that Donald Trump, should he win another term, would sustain anything like the level of support that the U.S. has for Ukraine now, either financially or militarily. And in fact, for the rest of Europe, as they look to the role that the U.S. has long had in helping provide security in Europe, facing the Russian threat, even that now starts to come into question with another Trump term. And I think we saw this episode just overnight with this plot being revealed against the potentially alleged Russian plot against to assassinate the CEO of a large German ammunition and military equipment maker, Rheinmetall. Another reminder that there are active levels of threats that the Europeans are seeing and warning about and combating, and the U.S., which helped identify this plot, has been an absolutely key partner in this up to now.
Yeah. But so, Dr. Wolfkin, is it then really hard to, get rid of Joe Biden as a Democratic candidate and keep him as president until November 5th?
I don't think so. I think in many respects, what would be the most straightforward for the Democratic Party is to keep Biden as president until November, and for him to sort of step aside in the campaign. I think that is unlikely. That's my cards on the table, to be honest, at this stage. And I think what we're going to see is kind of the slow unfolding of more of these concerns over Biden's age, of polling numbers that go up and down until it becomes too late to make a move.
So you think he's a presidential candidate for the Democrats come November 5th?
I do. I think we're in a position in which the infrastructure around how incumbent presidents can pursue their kind of candidacies really decided this one for Biden. Kind of, the time for the Democrats to intervene would have been 18 months ago.
Okay, so interesting. Thank you both for joining us here. Burfkin, they're associate professor at the University of Birmingham, and Bloomberg's Kevin Whitelaw. Coming up, President Macron's efforts to diffuse France's political crisis is also highlighting deep divisions and weighing on economic uncertainty. We'll get the latest from Paris next, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to The Pulse, everyone. Now, Kenya's president has dismissed most of his cabinet after deadly protests against his plan to raise more than $2 billion
in new taxes. William Ruto had been trying to stabilize his government's finances and gain access to new funding from the IMF. Now, for more on all of this, Bloomberg's David Maligna joins us now. So, David, I mean, this was a huge surprise to many that actually don't follow Kenya that closely. Why did he dismiss his cabinet?
I mean, the straight up answer is the demonstrators asked for it. I mean, they had been on the streets of Nairobi and some of the other cities in Kenya protesting against this hugely controversial bill where he was raising taxes on a lot of things, including basic items like bread and diapers. So they came out on the street, they said, we don't want the bill, withdraw it, and they also asked for the government to leave. So he withdrew the bill, which in itself was a huge statement. And then he let most of his cabinet go. And as things stand, at the top, it's just him, the deputy president, whose role is protected by law, and then the prime cabinet secretary, who that was as a foreign minister.
So what's the way going forward? Actually, was this a good bill? I mean, he had to also please IMF if you were going to get outside investments. So what was he put forward a mistake, or was it just tough on the population, but the right thing to do?
From where he took off from when he came to power, Kenya's economy was in a difficult state. It was heavily indebted. The currency was, sliding against the dollar almost every other day for quite a while. There were net flows from the stock exchange. So it was a bad, place to be in. So he came up with this fiscal consolidation plan. He said, bear with me, it's going to be tough. And frankly, it was kind of working. He had a plan, and we saw that the fiscal deficit was actually narrowing. But it looks like he might have gone a little bit too far in terms of raising revenue at a time when, the economy and things were really tough for people.
Watch this space. David, thank you so much for joining us. David Maligna there, of course, all over this news from Kenya that took a lot of investors by surprise. Now, after the French snap election resulted in a hung parliament, President Macron's call to build a majority from a center-left and center-right parties has been rejected. The left-wing alliance, the New Popular Front, insists that they have the mandate to nominate a prime minister. Meanwhile, Bloomberg has also learned that France will need to find 15 billion euros in savings or revenue to meet EU demands.
It was an historic gamble.
Emmanuel Macron calling a snap election following his party's crushing defeat in Sunday's European Parliament elections.
And it surprised everyone. And just a month later,
we have a hung parliament scenario. This is the first time no one is getting an absolute majority in the National Assembly.
So why'd Macron risk it in the first place? It was a dangerous election a president didn't have to call and would trigger panic in the country's vital bond market. So what sparked Macron's great gamble? And what does the outcome mean for Europe's second biggest economy?
Many very good questions. So joining us now from Paris is our bureau chief, Alan Katz. Alan, Macron's idea of a centrist alliance has floundered. So where are we in the negotiations to form a government? And good morning to you.
Good morning to you too, Francine. I mean, we're really not any further than we were at the beginning of the week. As you mentioned, the parties on both the left and the right have rejected Macron's call to sort of form a broad coalition. He put that in an editorial that he sent to the regional press in France the other day. They've said no. They really reject the idea that he could sort of decide, after having called this election and his party not having won and having lost a bunch of seats in parliament, that he could then decide sort of who gets to form a government or not. So we're really, in many ways, at a stalemate. Now, a stalemate. It's only been a week since the election. For people who are used to coalition governments, they often take a very long time to form, to come together. And so things could still unblock, but for the moment, there is really no progress to be seen on the creation of a French government.
Yeah, and Alan, congratulations to you and your team. I know you're working the phones, you have great sources, and according to these sources, whoever is in the next government will need to find 15 billion euros in either savings or new taxes to satisfy EU budget rules. How difficult would it be to find that sum, also given the manifestos?
So very hard. The manifestos all call for actually higher spending, including the manifesto of Macron's party when it was running. You know, in elections all the time, you will always offer, most parties offer some sort of promises to the electorate, and this is no exception. French Finance Minister Bruno Le Maire, who will be leaving at some point, but is still in position at the moment, has outlined a whole series of cuts to French spending that, in fact, go a long way toward meeting that 15 billion euro goal. But he's not going to be around for that much longer. Now, one thing to bear in mind is that 15 billion is essentially an opening statement from the European Commission. France is in the excessive deficit procedure with the EU, and so the EU is pressing it to try to reduce its spending in order to try to meet that deficit reduction goal. When there is a new government in place, there will be negotiations over the speed, the rate at which France tries to meet that goal. There might even be really sort of frontal conflict on whether France tries to meet that goal or not. But all of that, it's very hard to tell right now what that would be, because we don't really know the composition of what the government will be, nor what its spending and possibly even savings plans might be.
Yeah, and I guess the worries about the fiscal position of France are getting more acute.
They certainly are. I mean, one of the things that this election has done is it's really put a brake on business investments and fundraising for tech companies, and that in turn is going to have a knock-on effect on tax receipts that the government raises, not immediately, but down the road, tax receipts that the government raises. And so, the longer that this sort of instability lasts, the more delicate France's public finances become, as well as its economic growth outlook. And that, in turn, is going to have an impact on its deficit levels and how it interacts with the European Union. So the longer you have instability, the worse it is, really, for France on an economic level and on a sort of a reputational level.
Thank you so much. Alan Katz there, of course, our Paris Bureau Chief, and we'll have plenty more throughout the day on France and some of the troubles ahead. Coming up, a big weekend for sports fans. England take on Spain in the Euro finals. We talk the business of sport next, and this is Bloomberg.
This is Bloomberg.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Now, the England men's football team will take on Spain in the Euro 2024 final in Berlin on Sunday. With the tournament estimated to reach 5 billion people, the Euros is big business. So let's discuss what it could mean for European equities with Joe Easton from our stocks team. Joe, I mean, we all need good weather and England to win, and that's it. We're like a Mediterranean country. What stocks could be impacted?
Yeah, so I think the area we tend to look at first would be the pubs. Quite an obvious one, given we all like to get in the pub and cram in and complain about how we can't see the screen, but get in there anyway. So there's some good research. Some of the analysts like to have fun with this one, and there's a good note out from Morgan Stanley showing that when England do well, you do see a notable increase in beer volumes in pubs, and that translates to earnings. Not only when
even with winter weather.
Well, yeah, maybe the Winter World Cup that was an exceptional. Well, I mean, winter now, yeah, you rightly say, yeah, to be fair. And then, the more obvious ones, the hotels in Germany. That there was another note out from MS as well, saying that the average price of a hotel room in Germany in the third week of June, when there was 24 teams in the tournament, that was 30% higher than the weekly average. So you see a big jump. All those people want to stay in the same place. It has impacts on those leisure stocks. That's the first place to look.
Yeah, we have a prime minister who also loves football and loves artisanal. I mean, in her first week in office, it's not bad.
Yeah, no, I mean, I think he made the joke that with the Labour government coming in, the England team has had this turnaround in the performance. So it was a good little line from him. I like that. But as you say, he's an Arsenal fan, and I think he actually gave Joe Biden an Arsenal shirt when he went over to Washington. I'm not sure if Joe Biden is a big football fan or soccer, if he would call it, but Keir Starmer is a genuine football lover. He plays five-a-side every week. You can see him down at the Power League or whatever it is, playing football every week. So he's generally into it. So it's quite fun to see.
Yeah, it is fun. And you're going to the game.
I am. Yeah, I'm spending my life savings
and found flights.
Yeah, so
I'm sure they were cheap, Joe.
Well, yeah. Well, there's literally not any flights at all from London to Germany available anywhere. So I'm flying to Prague, and then I've got to get a bus from Prague into Germany, and then a train from Dresden in Germany to Berlin. So that's going to be around 24 hours of travel with a brief sleep in Prague, and then come back. I've got to stay until Tuesday, because how unfortunate that is to stay in Germany and drink German beer for an extra 2 days, because there's no flights until Tuesday. So I've got to stay. So it was difficult for my team leader to deny me the holiday for
It
that
is,
one.
but it's all in the name of research. So
exactly,
you can come back and we can cross live on Monday morning. And you think they'll win?
Yeah. I think that if we play how we played for that half an hour in the semi-final, the beginning half an hour, I think we'll beat anyone. But given Spain with Rodri in midfield and the wingers Yamal, I think logic tells me that we're going to lose. But I think that there's hope, and your favourite Jude Bellingham, maybe he comes up with something last minute once again, another bicycle kick, or Ollie Watkins, a moment of magic, we could do it.
He's really the best. And others. Joe, thank you so much, Joe Easton. They're talking about a pretty eventful sports weekend. Up next, the Bloomberg Brief with Danny Berger and Manus Criney. This is Bloomberg.
We're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, the electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit, how can we really tap into new things, continue being disruptive. We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Good morning from London. I'm Manus Kenny with Danny Berger in New York. You're welcome to Bloomberg Brief. Let's set that agenda.
Biden vows to stay despite two critical mistakes. The president stands firm that he will remain in the race. Earnings season kicks off. Traders await numbers from big banks, including JP Morgan, Citi, and Wells Fargo, reporting before the bell. And it's Tesla delayed. Sources say the EV maker is postponing its robo-taxi event, a blow to Elon Musk's autonomous dreams. Happy Friday, Manus.
Oh, Danny, happy Friday. Just trying to decide whether I book the Ryanair flight to Berlin on Sunday and shred the trip to Ireland. Yeah, there you go. Listen. Flamethrower blasted across the bond market yesterday as that low CPI came in, reinvigorating the dovish narrative. Down went the short end and the long end of the curve, but a slightly more steepeners. Now, what you've got here is the flamethrower of risk on bond markets, but prevarication on the equities. Look at the NASDAQ down. They almost inverted on themselves. The Mag 7 was down yesterday. It was tech that took the tumble, and the money flowed into the Russell. The Russell 2000 trounced the NASDAQ by over 5.8%. That was the spread and the differential. This is about the mounting narrative of rate cuts, the scale of the rate cuts, the cadence of the rate cuts. Is it time to jump into value? Is it time to jump into smaller stocks? There's the Russell this morning, as we can see, up again. Some individual names on the Mag 7 really taking a hit. Tesla, will talk more about that in a short while in terms of the delay to the robo-taxis. Will you end up with a better robo-taxi according to Wedbush Securities? At the moment, NASDAQ on the back foot. As I say, we have a number of other stocks to keep an eye on. It is full metal jacket in the bond market, as I say there. Gouldsby and Daly, we'll talk about that. They add the elixir of life to the rate cut narrative. And dollar yen, well, when it's shifting, why not jump in there? That is the view. You saw 4 big figure move in yen, strengthening. A lot of that has been undone. The Bank of Japan, I understand, has been in there price checking. Have they really? Did they make hay while the sun faded on the dollar yesterday? Is this a moment? There we go. Bank of Japan points to intervention. We'll ask Kit Jukes in just a moment. Danny.
Yeah, Manus, as is often said sometimes, the Fed has a reaction function and the market has an overreaction function, which is why I think it's significant that we did hear a change in tone from the doves. The doves have already been more bold, talking about the two-sided risk in the labor market, but the fact you have both Goolsbee and Daly coming out yesterday, Daly saying that it's likely some policy adjustment is warranted, Goolsbee saying that we said we won't move until we're convinced we're on the path to 2%. My view is that this is what the path to 2% looks like. That's at least two FOMC members, Manus, who sound ready to cut.
And they are quite significant in both in individual terms and in this building narrative. There'll be two more prints of inflation, two more jobs reports before September. The momentum moves to a 90% probability of a cut. Will it be one and done, or are there preconditions there, as Columbia Threadneedle say, for a sequence of cuts? But here's what our guests had to say on the inflation data, Danny.
The economy looks as if it's slowing. The labor market looks as if it's coming back to normal. Inflation looks as if it's coming down.
This is one of those times where, okay, the Fed is going to cut rates. We've been clamoring for cuts. Is it actually a good thing, though? And I think that's what markets are really dealing with.
I think they should go in September.
I do think they will start to cut in September.
They just need to be steady as they do this.
I still think that they'll start with 25 so as not to scare anybody.
If they rush it, it's going to actually look like they're scared about something.
If they move too quickly, the expectational set in the market could get ahead of themselves.
I still think September, December, March, June, September, December. 6 rate cuts, 1.5 years. I think that's what they should do.
Go slow, take your time. You've got a winning hand. Why would you do anything today or potentially September to destroy that winning hand?
Joining Danny and I this morning is Kit Jukes, Chief FX Strategist over at Societe Generale, writing this. The image that comes to mind is of a dam breaking. Higher for longer, sure, but once the rate starts to fall, the market will assume they do so quite quickly. Kit is with me here on the set in London. So did the dam break yesterday? Was this the fuel for a Powell full metal jacket pivot?
Well, there's certainly a big crack in it, let's put it that way. He's got 2 more prints before the September meeting, so you know, we're going to have a ton more information. But it was, firstly, it was a very striking CPI release because it was surprisingly soft, because the area of softness that finally fell into place was housing, which was important. And I might mention that, it's, you know, given that I've had big surprises on the downside in Swedish inflation, Norwegian inflation, I'm beginning to feel a pattern here in some way. So I think it is, you know, almost certainly a crack in a dam that will represent a change in things, and one that's going to be massively welcome at the Fed, because the economy's not in a terrible place. No. And so if they can ease policy now, and if they can react, that, you know, the soft landing chances are better the faster inflation comes down, right? If you have to keep rates high and really slow the economy down, and then you've got them too high for too long, that's how you get nasty recessions. So if I was Jay Powell, I'd you know, smile my way through my coffee and my croissant this morning, or whatever he does.
Well, you know, the entirety of the BOJ is probably also smiling this morning. I wonder who's more happy at this point, Powell or those policymakers. Manus mentioned it. We just got this line that looking at Japan's accounts, it looks like they spent $22 billion propping up the yen overnight after we already had a big reaction to the CPI. What do you make of that, of this being the point that they jump in and intervene as the data already points to a stronger yen?
It's interesting in the sense that it's clear that they're trying to be opportunistic. So, you know, they've probably seen that the CFTC data would indicate there's a very big position out there, more of it in options than in spot, and the market is on one side of the boat. So that if you come in aggressively, you might do something. The challenge they have is that from, I don't know, 140 to 160, the market's had all its own way. So some big money's been made by people trading dollar yen. The carry was huge. It still is huge. And they won't be easily dissuaded from a view that the interest rate differential, yield differential is still attractive. So if they want to turn the cycle around faster than nature would have it by intervening, they might have to come in and do a hunk more to win the fight. But if they do nothing, frankly, you know, we could get another spike higher. All sorts of things could happen. We'll still end up with a stronger yen in a year's time.
You've looked at the positioning in yen. Adam Posen was with Danny and I a couple of weeks ago, and he said, look, they're going to have to do something like the Chinese had to do a number of years ago, which was over $1 trillion of intervention to really shift the dial from 160 to 140. They're throwing peanuts at the gallery here.
Yes, although they're big peanuts by historical standards. What we found out is that intervention sizes to work now from the days when it used to happen a lot. There's just a different order of magnitude, so you wonder whether it's worth the effort. Intervention in itself looks to me to only be successful if you're, A, you've got the fundamentals on your side, which actually matters, B, if it's bilateral, trilateral, but not unilateral, whatever else, and C, you're willing to go in considerable size. So I think it's difficult. So I think the important piece is you can shift the timing and you can move some speculators around. But the fundamental reasons for dollar yen having gone up so far was that the Japanese kept rates so low while everybody else was raising them. And the economy has only seen a significant improvement in one industry, tourism, right? I mean, the rest really hasn't. So the lag from cheap currency to stronger economy that we kind of expect to happen in today's complicated supply chains is much messier than it used to be. And that would give me two doubts. I mean, one, how far back dollar yen goes, where is fair value? If PPP is somewhere in the 90s, I don't think we're going back there in my lifetime, but we'll see. But the Japanese economy is not getting turbocharged by having an absurdly weak currency yet. So I think that makes you sort of stop and pause and say, all right, I think as US rates do come down, if the US economy slows as well, we should get dollar yen back to 140 at some point in the next year or two. Maybe we'll get it back to 130. But how do you resolve the fact that the yen is going to remain a cheap place to go on holiday, for starters, still a cheap currency in the way that people think of valuations?
Yeah, I mean, who among us doesn't have a friend that's been to Japan in the past 2 years? I feel like I have a whole cohort of friends that have done that. And Kit, part of the reason this is complicated, going back to where we started, is the dollar's trajectory and the confusion for 2025, the fog of 2025, as I've said so many times on this program. In that, Goldman Sachs says that there's only a short window for dollar weakness right now. And then once we get to 2025, the political implications means that that's not a sure bet. What do you think about that?
It depends on your view of the economy. I mean, deep down, look, if the US economy is going to have a lucky escape from any kind of recession, weak growth, and then back to more accommodative fiscal policy than the rest of us because the US can, and 3% growth while the rest of us mess around at 1 or something, then the dollar's not going to go down very far. It's going to remain an expensive currency for a long time, and this will just be a correction. My caveat to that in my mind, though, is that this is the third big sort of carry rally for the dollar since I started work in the early 1980s. And the first two, that ended in 85 and 2001 just, both saw the dollar give back all of its gains. The whole rally was reversed by 87. There wasn't a recession. There was nothing wrong with the US economy. The Fed cut rates, but the economy was fine. In both instances, in the second instance, we called it a recession for a bit, and now we're not sure it was technically a recession. So the sheer weight of the money that has gone into dollars, as they have hoovered up the world's excess savings to do good things with them, does leave room for a big position unwind that gives them a cheaper currency if inflation comes back under control. So I'm open to the idea the dollar has significant weakness to come.
Okay.
A sample of 2 in my career isn't a big enough sample to be sure, but why not? It could go down quite a long way.
Hey, Kit, before we let you go, is it coming home this weekend? Can England pull it out against Spain? I'm
not going to jinx them by saying they can. I fervently hope so.
Okay.
I'm going to go root loudly. The Spanish are quite good at football, so we'll have to play well.
Yeah. I feel like that's a good emotional hedge, not like completely committing to it. Kit, thank you so much. Kit Jukes of SocGen there. Okay, let's get to some of our other top stories trending on the terminal this morning. China's trade surplus soared to an all-time high last month. A jump in exports overwhelmed an unexpected decline in imports. The figures raise the risk of greater trade tensions where Western countries have been increasing tariffs on Chinese exports like EVs.
The Bank of Japan conducted so-called rate checks with traders, fueling speculation of yen intervention. The Japanese currency was also volatile in early trading this morning, reinforcing the perception that authorities did intervene in the market again on Thursday to prop it up. Coming up in the show, Tesla snaps its losing streak after delaying its robo-taxi announcement. More on the fallout. That's next on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Tesla is about to give us a lot more information about the robo-taxi opportunity. At first it was August 8th. Today they pushed it to October. And that just tells me that we're probably getting closer to this robo-taxi opportunity, not further away. He wants to show us something more, I think, awe-inspiring than we might have seen on August 8th, and he believes it's possible by October.
I love that. A later event means we're getting closer to the event. Work that one out. ARK Investment CEO Cathie Wood speaking to Bloomberg last night. A lot of Tesla bulls remaining. Wood among them, Dan Ives among them, after they postponed its planned robo-taxi unveiling to October. Joining us now is Bloomberg's Craig Trudell. Craig, I mean, to be fair to Cathie and Dan Ives, it's only a 2-month delay. But I guess the fact that it's Tesla makes us question that. So why do we care?
Well, I think what this sort of speaks to is this idea that, you know, maybe that the market had its hopes up of not only that this was going to be an event where it was only just, you know, a matter of a few weeks away, or in April, you know, it was only a few months away. I think there was also a sort of a hope that this company maybe was going to break from its past of you know, having these events, staging these events, and then taking years to put something on the roads. After all, Tesla has been talking for many years about its work on self-driving technology and its ambition to put a, you know, robo-taxi fleet out there that it would manage. So maybe in this case, you know, they would stage this event and soon thereafter have something ready. I think what our reporting speaks to is this idea that, you know, even just this week, they're still working on the design of this thing. So Whether or not it's fully baked, I think the reporting that we produced yesterday really speaks to the idea that this is not something that is just going to, quickly be ready for roads.
Brings back like a 90s hit in my head, which is, I promised you a miracle. And one of the miracles was the pillar of AI, robo-taxis. It was an evangelist kind of moment. UBS downgrades the stock this morning. They say too much too soon on the AI. Now, look, for one injury, flesh wound to Tesla, it's a boon and a swoon to the Uber and the Lyft of this world. But is that short-lived? I mean, ultimately, this robo-taxi will be delivered. But in the interim, do I make hay on the others?
Well, I think the idea, as you allude to, this was an 11-day run for this company where they added almost $260 billion worth of market cap. So did it maybe get carried away? I think it's fair to say that was a little bit much. Whether or not this is disruptive to Uber and Lyft, I think is a really interesting question, because this, after all, is something that's kind of reminiscent of what, Travis Kalanick was talking about when he was still running Uber, this idea of bringing the human driver out of the equation. Those companies really sort of abandoned that idea when they realized just how difficult an engineering task this was going to be. And so there has been this concern of whether or not Tesla would come in here, be able to do what those companies couldn't, and disrupt them. I think there's maybe some relief here that maybe that's less of a risk.
Okay, well, let's keep an eye on it. Of course, that was Simple Minds that wrote I Promised You America. I'll leave that reverberating in all your heads. Craig, thank you very much. Let's turn our attention to aviation. Boeing back in the headlines again. Customers expect further delays on delivery over the next 2 years. This is on the 737 MAX airliner. Sid Phillip is with us. Sid, look, we know there are supply chain issues. We know both from Airbus and from Boeing. But again, this new set of delays, how much of a blow is this to cash flow?
It is a major blow to Boeing's cash flow because, I mean, for Boeing, you get all the cash in when you actually deliver the planes. And so for Boeing, they need to sort of deliver planes. And customers are also waiting on aircraft, and they're looking to replace fleets that are long in the tooth. And so it is a blow for Boeing. It's also a blow for the airlines because they have to wait much longer to replace aircraft.
I am having a little bit of whiplash, Sid, because didn't we just learn that Boeing had, for the month of June, its best delivery since the January incident? Square these two things for me, because that seemed to indicate a maybe brightening picture for the plane maker.
Morning, Danny. So yeah, it is a sort of a whiplash because on one hand, Boeing's had its best ever month in terms of deliveries in June, but then at the same time, that's on a very low base. And I mean, before the pandemic, Boeing was making like many more planes than it is now. And so ever since January, it has been slow and sort of trying to ramp up production after the sort of blowout that they had on the Alaska plane and ensuring quality and everything else. But at the same time, it is a far cry from where it was pre-pandemic. And it's also a far cry from where the company originally planned to take production as they moved along and sort of recovered from the pandemic. And it sort of speaks to the whole supply chain crisis that the industry faces, including Airbus.
All right, well, I know we're going to get Boeing earnings later this month, so maybe we can get some even more clarity. Sid, thank you so much. Bloomberg's Sid Phillips. Okay, coming up, we're going to take a look at some of the headlines around the world, including a foiled Russian plot to assassinate Europe's top defense boss. Really wild story. We'll have more on that for you next.
In tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got
intelligence, if you want to give it that, moniker, but it's not the same intelligence that I have.
Especially I'm afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
It's Bloomberg Brief. I'm Manus Cranny in London, Danny Berger alongside me in New York. We're apart, but never far away. Time now for you front page news. This is what we've got for you. A look at what's making the headlines around the world. First up, Wall Street Journal leads with reports that Donald Trump is the cloud hanging over Ukraine's path to joining NATO. Declaration of an irreversible path to membership this week could easily be blocked. There are no guarantees on the future funding either, Danny, so that damn.
Yeah, and relatedly, the FT leads with this, Manus, first uncovered by CNN, a report on the Russian plot to assassinate Europe's top defense boss. That is the CEO at Rheinmetall, which, of course, gives a lot of weapons. It makes a lot of weapons manufacturing that's being used by Ukraine in the war. U.S. intelligence uncovered this plot, and then German authorities then foiled it. Senior NATO diplomats are claiming that the attempt was part of a wider Russian sabotage of European NATO states, of course, as NATO is meeting a clear escalation, Manus.
Yeah, and then the New York Times highlights, of course, Joe Biden increasingly isolated as the rank and file of doubters over the president's sharpness, it grows. Close allies, close aides to the president are beginning to weigh in, we understand, to persuade Biden to drop out. They believe they have to make the case to Biden that he can't win, and there needs to be an orderly process, Danny, to replace him. I mean, this was the big boy, I think I saw one phrase, this was the big boy conference. There were two pretty big mistakes that were made on Zelensky and on Kamala Harris. And the point about it is, straight afterwards, you had, again, growing voices of dissent. I just wonder, is this weekend, you know, some kind of a pivotal close to this?
Yeah, to be fair, it was the Biden team that was using the phrase big boy news conference that was originally come up with by our own Justin Sinks reporting. And look, he had those two mistakes and he quickly corrected himself. But the fact we're focusing on that shows, one, this is a campaign that will maybe be won and lost on TikTok sound bites. But two, perhaps, Manus, the damage is already done at this point. If that's what we're concentrating on, what was otherwise an hour-long and pretty robust press conference.
Yeah, it was. I mean, look, you know, he did take 11 reporter questions. It did go on for an hour. And the Labour Prime Minister was, the new Prime Minister of the UK was reasonably complimentary. We'll talk to Prime Minister next on the correlations.
my greatest advantages, I own my company 100%. No board of directors. I make a decision, we move. And I had a guy say to me, runs a big media company. This guy ran a major division, Warner Discovery. Okay. It was just Warner Media at that time. He says, you know what, when we sit in our meetings, we don't talk about Disney. We don't talk about Paramount. We don't talk about Sony. He goes, you know who we talk about? I go, who? You. I said, really? He goes, yeah, you. I go, why? He goes, we are giant battleships, and you're like a little speedboat. And if there's gold on the beach, you run rings around us, get to the beach, take the gold, and by the time we turn our battleship around, you've already taken the gold. I go, that's right. I'm always gonna be that entrepreneur. I started my company from my dining room table 30 years ago. 30 years ago. And I started by calling every television station, asking them to carry my once-a-week show. On average, they all said no 50 times, and I worked through about 50,000 no's to get 150 yeses. That guy that was at that dining room table trying to pay his phone bill is that same guy today, 30 years later. That fire is still in my belly. I still run scared, and I'm still running after that vision of building the world's biggest media company.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
From our global headquarters in New York, I'm Danny Berger alongside Manish Cranny in London. Let's set your agenda.
Biden vows to stay despite two critical mistakes. The president stands firm. He will remain in the race. Earnings season kicks off today. Traders await numbers from the big banks, JP Morgan, Citi and Wells Fargo. The results hit the tape before the bell. And Tesla delayed. Sources say the EV maker is postponing its robo-taxi event. It's a blow to Elon Musk's autonomous dreams. Danny, good morning.
Good morning, Manish. It was relief yesterday from a very good CPI report, one that had central bankers Goolsbee and Daly saying essentially, we are there. The reaction was palpable in the bond market. 2-year yield drops by double digits, down by about 10 basis points. We are flat this morning. 4.51% is where we stand. Opposite reaction in equities, and it was all because of the Mag 7 helping the S&P break its 7-day winning streak. Mag 7 has its worst day since 2022, while small caps have their best day so far of the year. Small caps, you can see on the bottom of your screen, still outperforming this morning versus a flat S&P future session. Meanwhile, dollar versus the yen. It's unfortunately for the BOJ, it is yen weakness again this morning after we learned that they spent $22 billion in looking at their accounts in propping up the yen. We're at 159 despite the fact $22 billion of intervention, Manis, plus a cool CPI report. Kit Jukes from SocGen with us moments ago saying that if they want to see real movement, they're going to have to spend a bigger chunk of change.
It's a brilliant moment of where you see central banks make hay while the sun shines for them. You saw that, pressure on the dollar yesterday. In they come. Kit Jukes from SocGen says, look, it's going to take an awful lot more to get from the 160 level to the 140 level, and it's going to take a heck of a lot more intervention than what he has seen so far. And so much of the gun is loaded in terms of being long dollar to the yen, and that monster carry trade. Danny.
Yeah, although he did say in a year's time the yen will be weaker, considering the trend across global central banks is to cut, save for the Bank of Japan. Now, elsewhere, Manis, we have to really dig into the reaction to the CPI report. Priya Misra, portfolio manager at JP Morgan Investment Management, writes this: stock-bond correlation should come back with the Fed in play. Owning high-quality bonds makes sense as a hedge to equities. Priya joins us now. Priya, good morning. Great to see you bright and early in the studio. And look, I know you've been advocating for quality bonds for some time, but this is a market that looks at political risk, confusion over the path of the Fed of when they're going to cut, and says the only thing I can buy right now is tech. Did yesterday change that?
I think so. You know, I think we've been sort of, will they cut, will they not cut, how much do they cut in terms of the Fed? And until the Fed starts to cut rates, all the cash is happily sitting on the sidelines. You're earning 5.5%, why bother extending out the curve? Well, that changes because what Chair Powell's been telling us and the Fed's been communicating, they need some more good data. Well, we had great data. We had data, you know, other than the headline number that was weaker than consensus. If you look under the hood, it was shelter. Shelter really has been downshifting slowly. There's inertia in that. So as the Fed gets comfortable that we're heading back down to 2%, I think, you know, people start to move out the curve. The other thing that the Fed has been telling us is risks are getting balanced. I think there's been a subtle shift in the message from the Fed that instead of the fear, and the market's getting there too, the market focus, the Fed's focus is now moving away from just inflation to growth. And what the Fed's telling us is if things start to slow down, and we're seeing some cracks, absolutely. The economy is slowing. I think we don't know whether it's slowing below trend or it's sort of staying around trend. But if things slow down, the Fed's going to come in and they're going to cut more. So I think owning high quality bonds, it's giving you income. It's given you income for a while, but it's giving you that hedging property, which it hadn't had because we were so concerned about inflation. You highlight political risk, that's absolutely you know, out there on the horizon, but the election is still 3-4 months away. So I think until that, if things slow down, we have a big retail sales report coming up. If things are starting to slow down, we're going to price in more rate cuts. Yep. I don't think the market's overdone.
Priya, good morning. It takes me to come to London for a few days to get you into the studio at 5:30 in the morning, but it's good to see you. It's good to have you on the show. 7 days ago, Danny, yourself and myself sat around the desk and we discussed bear steepening. Here we are 7 days later with a very, very important piece of evidence to promote duration. How does that play into your view on the curve now, 7 days later?
So, you know, you would say, what does one data point do? Well, it gives the Fed confidence. It gives the market confidence. On the steepener, so I've had a lot of conviction on the steepener, whether it was bear steepener or bull steepener. I think now I have more conviction on duration itself. And here's why. As the Fed starts to cut rates, and we think we're there in September, you know, whether it's September or November, the Fed's almost there. The curve can continue to steepen, but I would look at duration because in a soft landing scenario, the Fed cuts to, let's say, about 3%. In a hard landing, they're cutting much more. But, you know, that's where what's priced in, 3.5 end point. I think we move away from when do they start to the totality of cuts. And in a soft landing, I would argue there's still more room for rates to fall in that belly of the curve, you know, that 3 to 7 year sector. We do think those rates can fall in a soft landing. And here's where that hedging property we were just talking about, you get any weak data, the market's going to price in more cuts. We should price in the scenario that there's, maybe it's a 20% chance. 20% chance that the Fed can cut much below that 3.5 is why that duration now starts to look attractive. Look at all-in yields. If you're getting 6% in high-quality spread product, you're supposed to buy it now because in the next 6 months, that opportunity is going to go away because just treasury rates are going to start to fall as we sort of embark on the easing cycle.
I really like that idea that this market's going to concentrate not on when we cut, but how much we cut. Because that is a debate. There's a difference between a mid-cycle tweak and a full cutting cycle. So what difference does that mean for you in your duration allocation? And you say it's attractive either way, but how much can you fully go in if it is a mid-cycle tweak versus more aggressive cuts?
Right, great point. Soft landing rate cuts are rare. They're rare, they're hard for the market to get its head around because we haven't seen it. Now, we're in a soft landing right now. I think the question is, do we continue? To your point, I think conviction on duration has to be a little less. So are we putting our entire risk on? No. Given the data right now, we might persist, you know, we might stay in the soft landing. In that scenario, the Fed cuts to, let's say, 3%. So then how much can that 10-year fall? The 10-year then should probably be between 3.5% and 4%. We're not that far from that. So I would put less, you know, I would put some risk on here in duration, just not max risk. If you start to see signs that the cracks that we've seen cracks in low-income consumers, small businesses, if they start to broaden out, if we start to see those job numbers, and again, I would say we don't look for negative payrolls. I think anything around 100, 150 is telling you that the unemployment rate's going to rise. Well, then you add a lot more duration. So mid-cycle correction would be, I would say, 200 basis points of cuts. Recession, we're talking a lot more. That's when I think that duration, the amount of risk you can put on duration starts to increase.
Well, I just wonder how much of a canary in a coal mine was the Delta numbers yesterday, talking about oversupply and finding. That's the first time I've heard a major airline talk about having oversupply in the cabins. Priya, we've heard the message loud and clear. You're now building towards a duration position. We had Padraig Garvey in the seat yesterday from ING, and he said, look, if Biden steps down at any time, and let's assume Kamala Harris steps in, if Biden steps down, he sees it as being a risk-off event and a driver of money into bonds. So just stand back from the noise of the politics at the moment. Would you see that kind of conjugation, in other words, a shift in the Democratic ticket, could be perceived as risk-off event for all the fiscal issues around it that may reverberate? Could you see that provoking a further leg up for duration?
So I think political risk is so hard to price in. You know, these are binary risks. But if I go back a month, I think we were pricing in divided government. What happened in the last month was that probability of a Republican sweep increased, and I think people zeroed into to fiscal stimulus. So some of the rise in rates, particularly in the long end, has been this idea that the deficit will increase much more, that we're going to get fiscal stimulus. If that starts to go away, I think, yes, I think the knee-jerk reaction would be lower rates led by the long end, as this idea of either divided government or not as much fiscal stimulus starts to get priced in. But I will still highlight, there are going to be many such opportunities. The market's shifting from one narrative. Remember, just a few months ago, we were talking on the show around, you know, higher inflation, re-acceleration. Then there was concern around recession. I think we're seeing something very similar. So I think you're supposed to fade these extreme moves. Now, if today was end of October, I might say hold off, de-risk. But we've got plenty of time between now and the election. So I think if you get too much of the lower, I think knee-jerk, absolutely. But we'll be watching for, you know, has damage already been done? So, but if it looks like the Democrats are gaining ground, the first move would be lower rates. But then if you get a Democratic sweep, I think rates might rise again, because then you might get more spending. So there's plenty of things that can move us, and I would say let's try and fade some of those up until the election.
It sounds like a bifurcated bond market, traded right up until the end of October, and then review, redux, reload. Priya, thank you very much. Priya Misra of JP Morgan. Take your opportunities on this rolling bond market. Coming up on the show with Danny and I, the plot to persuade the president. Biden doubters grow in number, so do his lapses. More on the race to the White House. That's next on Bloomberg. Context matters every day from London and New York. Good morning.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will
this be the last of its kind? No. This is the nature of capitalism. Get over it.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays around the world right here on Bloomberg. Context changes everything.
Now I want to hand it over to the president of Ukraine, who has as much courage as he has determination. Ladies and gentlemen, President Putin. President Putin. We're going to beat President Putin. President Zelensky. I'm so focused on beating Putin, we got to worry about it. Anyway, Mr. President.
I'm better.
You are a hell of a lot better.
Moment on stage at the start. That was Joe Biden misspeaking last night at the NATO summit in Washington, as well as confusing Zelensky for Putin, the president whose mental sharpness is in the global spotlight, referred to his vice president as Donald Trump rather than Kamala Harris. Still, the president advised he isn't going anywhere. He's still running for a second term. Our Brussels bureau chief, Kevin Whitelaw, joins me and Danny now. Kevin, look, it's almost like deja vu, isn't it? This was the start of the press conference. This was the moment, and there was another lapse. Does it embolden the doubters? Does it embolden the fuel that they really need to act quickly?
They certainly did nothing to douse the flames. I mean, that's clear. Even though most of the rest of his full press conference was a pretty strong performance, he had strong words, he had cogent arguments and answered questions pretty well. That moment and the moment where he called his vice president Trump, that is, that's what everyone was looking to see if it was going to happen, and indeed it did. And so it does nothing to change the overall narrative of a Democratic Party that's increasingly panicking about the risk that they'll lose not only the White House, but also the House and the Senate come November if Biden stays in the race.
And it brings up the question of, could anything change it? If all we're focusing on are slip-ups, and I mean consequential slip-ups, but nonetheless small slip-ups at that. So Biden has said, he talked about this in his interview with George Stephanopoulos, saying it's the Lord Almighty that could convince me to drop out. Well, there's this report saying from the New York Times that some of his allies and some in his campaign are looking at a plot to persuade him to drop out. Is that equivalent to the Lord Almighty, Kevin?
I mean, I guess it would depend which allies and how hard they're working. I don't think we have the details of that. But, I think that Biden went into this race with the same calculation he did in 2020, which was that he was the Democrat best placed to beat Donald Trump. And it's not clear that he's seen anything yet to change his mind on that, even if you're starting to see other people have those doubts. And so, his family's going to be super important in that. He does have some close aides that have been with him for years. But, those are also the people that have a fair amount of incentive for him to stay in the race. And so we don't really know what they're saying in private. We don't really know what that actual conversation is. The other risk for Democrats is the polling isn't entirely clear that replacing Biden, we don't really know how much of a boost that would get. It's a very difficult effort to try to introduce someone effectively new, even if it's the vice president, into the race right now. And so there's sort of a pretty strong unknown either way. The Democrats could simply make the call that the vote is actually Trump or not Trump, and any not Trump is about the same when it comes to the outcome. If that's what they conclude, then, I expect we'll still see him in November.
How important or how pivotal will this polling be that apparently the Democrats are doing, which is to understand where Kamala Harris ranks relative to Biden? Is that enough, you think, to shift Biden? I mean, there was a small window where he says there are other people that could beat Trump too. I mean, this I thought was quite interesting nuance. If they came back and said there's no way you can win, will that poll be a pivot enough if it comes back and sends a message to Biden?
I mean, we don't know, really. The polls have already been grim for Biden even before the debate, and the path to victory was looking rather narrow. The problem is you're coming to something that is the hardest thing for polls to measure, which is turnout. And it's going to be that question come November of how motivated people are to vote, how many of them go out. And some of them are going to be motivated to vote for or against Trump, no matter what. So then the real question is, what about the people who are on the fence? What about the people who are a little fed up with their choices? You know, is a Kamala Harris or another Democrat going to move the needle for them any more than Donald Trump? Polling is pretty hard to sort of nail that down, particularly when it gets to the fact that we're only looking at a handful of states where it really matters.
Yeah, I mean, polls can't exactly account for all the new information that voters will have to absorb. They're basically just asking now, tell us what you think about someone that you haven't had a lot of time to think about at this point. Kevin, we appreciate it. As always, Bloomberg's Kevin Whitelaw. Now to the earnings that we're going to get today. Shares of the biggest U.S. banks have been on a tear this year, with all but Morgan Stanley outpacing the S&P 500. JP Morgan, Citi, and Wells all report their earnings today. With us now is Bloomberg's Sonali Basak to get into this. Sonali, what are you going to be focusing on today in these earnings?
Listen, Danny, there's a lot on the line on these earnings, not only because we're halfway through the year, but because there's so much uncertainty ahead. And if you look at JP Morgan, Bank of America, Citigroup, and Wells Fargo, the question is, do Main Street businesses perform just as well in this environment? You saw this knee-jerk reaction yesterday when you saw the CPI data came out. When you saw that sharp drop in yields, you also saw the biggest U.S. banks also fall. And they recovered a lot of those losses, but it just goes to show, even if interest rates drop, the question is how much juice is there left in the consumer to keep on borrowing? You had Bank of America earlier tell investors that they think that the second quarter, so the current quarter that we're really seeing come out in the service now, really be the bottom for that net interest income, but how much can they recover is the question. And also, how much can they all keep costs in line? For JP Morgan, there is an expected 5th consecutive quarter of double-digit cost increases. And so the returns on equity, even at JP Morgan, are supposed to be, according to analyst estimates, slightly compressed compared to a year ago.
Sonali, good to see you. The green shoots of investment banking, the IPOs that were supposed to happen, the deals, the M&A deal flow has increased. The IPOs maybe not to the level that we had hoped, but the overall fee for equity and debt capital markets should be robust in the second quarter. Is that the jumping off point?
I'll steal from Erica Najarian of UBS yesterday. They are coming off a super low bar, she said, and that is the truth. You see some of the numbers that were posted a year ago when business was just stifled, and it was pretty muted. So the question is, how much can those Wall Street businesses supplement the Main Street businesses? Over on the trading desks, the volatility has certainly helped in rates, in currencies, and commodities, and you see that expectation really feed through in the expectations for, say, JP Morgan, Goldman Sachs, Morgan Stanley. But Manus, that investment banking dream, while it has increased the activity this year, it has still not added up to what most deal makers would want it to be. And given the second half has a U.S. election season in it, there are a lot of questions about how much it would pick up from here. So to your point, we've seen some IPOs, we've seen gangbusters, debt issuance. That has been a big savior, but we have not seen M&A come in through the pipe like a fire hose, at least. So we have seen a rebound, and they should benefit from that.
And then the other cloud overhanging all of this is also the implementation of Basel III and some of the capital rules that come with it that banks have been pushing back against. Will we get any sort of flavor of that in the earnings impacts or where they stand in trying to convince regulators otherwise?
Absolutely. It comes up every quarter, particularly with JP Morgan. But the interesting thing about it here is going to matter more and more going into next week with the regional banks, given that they are going to be impacted in such an outsized way. The other thing that we haven't gotten a lot of clarity on is how these Basel III endgame rules will impact trading desks. And given what we were saying about that rebound in capital markets activity, that's where really the rubber hits the road for the Wall Street businesses that so many investors were excited about. Will JP Morgan stop lending on credit cards? Probably not, right? But there are certain trading activities here that many of the banks may have to reconsider in light of these Basel rules if those rules are not meaningfully changed.
Yeah, well, you're going to hear the clarion call from the Europeans and the Brits here, which is, the playing field is differentiated. And lobbying works in Washington when it comes to capital rules. That'll be the other call that you'll hear from this side of the Atlantic. Shonali, thank you so much. Shonali Basak there, tracking the bank earnings. And, of course, more on the bank earnings a little bit later on Open Interest. We have Chris Marinak of Janney Montgomery joining the team. Coming up with Danny and I, economic data to round out the week. What have we got to focus on? Well, context matters every day from a hazy London city.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry. And
crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Let's get you set up for your trading day on this Friday. JP Morgan, Citi, Wells Fargo all report before the opening bell. And then some economic data. U.S. PPI comes out at 8:30 a.m. Eastern. Plus UMich, that is at 10 a.m. Eastern. But of course, minus the most important event, 3 p.m. Eastern on Sunday. England takes on Spain in the Euros finals. I've already got the bar booked out. I am ready. I got my England kit. You won't see me on Sunday. I'll be posted up there.
You'll be held up somewhere in a bar with the burgers and the beer. It's 700 euros to get yourself from London to Berlin. Big shout out for Michael O'Leary. Don't say I don't do anything for you, Michael. Let's have a look at Tesla, down 1.77%, dropping again. Bloomberg scoop that it's delaying his robo-taxi from August to October. And what you've got there is, of course, down 8% yesterday. It comes to mind, Simple Minds. I promised you a miracle. It's not exactly being delivered on time. Boeing 737 MAX customers, you're going to have to wait for more aircraft, more delays, 2025, 2026. JP Morgan Chase, we're counting down to the numbers, Danny, ahead of the opening bell. What will the allocation for bad debt be? That's the question in my mind.
Manus, I was under the impression there were no flights left to Berlin, that you'd have to like basically walk to Germany
700
if you
euros
wanted to get there. I'm surprised there's even anything left.
There's a wee ticket in here. Oh no, that's going to Ireland actually, not to Berlin. And I'm not going to talk to you about the price of tickets of flights to Ireland. Extortion.
Oh man, if only it was Delta. Apparently they're discounting. Anyway, Manis, surveillance is up next. This is Bloomberg Breathe.
We're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
The markets are essentially priced for Fed perfection.
The market has already gotten to the point where you're likely to cut 2 times this year.
The concern is if they move too quickly, the expectational set in the market could get ahead of themselves.
I'm a little bit more cautious in the near term because I'm seeing evidence of investor over-optimism.
The most dangerous time for the economy is usually when the Federal Reserve decides they're going to help us.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get you to the weekend. What a long week. From New York City this morning, good morning for our audience worldwide. Bloomberg Surveillance starts right now with equity futures on the S&P 500 positive by 0.1%. Here is your day ahead as Wall Street kicks off earnings season. A little bit later this hour, we get numbers from the likes of JP Morgan, then it's Wells Fargo, then it's Citi. Later on this morning, another read on inflation with PPI data, then 10 a.m. Eastern Time, UMich consumer sentiment. We have to begin this morning, though. I have never seen people so happy with a drawdown on the S&P 500 by close to 1%. Have you?
Everyone's been praying for this broadening out, and that was what you got yesterday. You saw a real big performance from the equal weight. You saw a real big performance from small caps. Mag 7 fell the most going back to October 2022. People are cheering this, but you asked a question offline, and I'm going to cheat, and I'm going to say, you asked the question, how many people are in this broadening out trade and are not just celebrating it on paper?
They were certainly chasing it yesterday. Let's just get to that graphic again. Just look at these moves in yesterday's session. The move on the NASDAQ, down hard. On the NASDAQ 100 by more than 2.2%. On the Russell up by 3.6%. Small caps outperforming the NASDAQ 100 by the most since November 2020. You've posed the question, how many people today think something material has changed after the data and the price action we got yesterday?
That's a great question. We did have the two-year yield fall the most since January. Suddenly, September very much on the table with the likes of Mary Daly as well as Austin Goolsbee of the Federal Reserve coming out and giving ammunition to this, saying, if we were looking for confidence, guess what? We kind of got it. So it gives the sense that the Fed is preparing to cut rates. Now the question is, will the data hang in there enough, like the jobless claims suggested, to make it a good rate cut, to make it just a mid-cycle adjustment that allows some of the more leveraged companies to actually do better, given that borrowing costs ostensibly are heading lower?
Going into the number yesterday, you asked Michael McKee a question. What's the most important number here? Is it CPI or is it jobless claims? We were talking about this. I don't think that CPI looks as good without that jobless claims number. That jobless claims number sort of cemented this idea that we can get back to 2% and we don't need to worry about the labour market too much. But another question for this morning, that goes against the grain of the last couple of weeks. Was claims yesterday an outlier? Or was that actually a decent read on where this labour market is? Is that the kind of strength that this Federal Reserve, this chairman, thinks we have?
You know, it's a great point, and it's ironic that as we were talking about the earnings, the likes of Delta and Pepsi and Conagra and how disappointing they were and the pushback that consumers are feeling with respect to pricing on even some of the best performing industries, I'm thinking travel, we had a better than expected jobs print, and everyone said this is Goldilocks. Is it Goldilocks? Is the margin compression we're seeing in a lot of companies simply a factor of what we're seeing with inflation coming down and people said you would see margin compression? Or is this really a sign that things are moving more quickly than a lot of the headline data can reflect?
So this is the price action, and we'll get more data later. We have to talk about the politics as well. I'm sure you sat through it. It started about 7:30 Eastern time. It was a 7-minute address from the President of the United States. Q&A lasted about 50 minutes. Lisa, I think we're both going to agree on this. For some, it wasn't bad enough to drop out. For others, it wasn't good enough to stay in. And I'm not sure that you can put the toothpaste back in the tube after the last couple of weeks in this country.
Well, that's the key point. How much can you change this? And honestly, Joe Biden nodded to that last night. He said, you know, it's never going to be enough for some people. They're just going to say, wait another month, wait another day, see what else happens. Look, I'm fine. The key issue is there were a couple of gaffes. People are going to focus on that. I'm less focused on exactly that. I'm more looking at just his demeanor, the fact that he couldn't really answer how well are you going to be able to do this in 4 years, and a lot of questions just going forward about his energy state, and frankly, quickly deteriorating levels that we don't feel like have accurately been reflected by people who are closest to him.
Let's park the gaffes. We'll talk more about the gaffes a little bit later. Let's just leave that there. That's dominating the headlines. I get it. And we will play some of that for you in about 10 minutes' time. He opened the door yesterday to something new. There was some humility there that we didn't see in the last couple of weeks. He opened the door to the idea that it's not just him that can be the former president. And if you think about the whole reason he's been running for a long, long time, him and the people around him, the whole argument here was that he was the only one that could be the former President Donald Trump. I think that was the first time we've actually heard an acknowledgement that others can too. And I wonder how much oxygen's going to sort of like breathe some life into that story over the next couple of days.
Well, and the oxygen is just waiting to be had, given the fact that we're getting reports that his campaign is examining what a matchup between Kamala Harris and Donald Trump would look like, that it's secretly polling people to get a sense of what this is. We don't know why. Maybe it's so he can come out and say, actually, I'm the only person who can beat Donald Trump. But there's almost seemed like a tacit admission that they were open to looking at what is going on in the polling and what is the best opportunity to beat the former president. Honestly, people are going to speculate a lot. People are going to talk about the gaffes. To me, last night was sad. And really, it goes to this question that we all have when dealing with aging relatives or friends, when they can't have the same kinds of energy and performance as they have in the past. It is difficult to say. It is difficult to know how to go forward, and you can feel the torture that a lot of people in his party feel right now.
You can, and I'm sure you could feel the torture in this market yesterday if you weren't long small caps. Do you like that transition?
that was
okay,
good.
Let's move on. Equity futures on the S&P 500 firmer here by 0.1%. It's a little bit of a lift to go into the weekend. Yields higher by 2 basis basis points on a 10-year yesterday post-CPI. You saw that break of 420. Back above it now on a 10-year at 422.75. Coming up this hour, we'll catch up with John Stolfus of Oppenheimer on a mega rotation out of mega caps. Isaac Boltanski of BTIG with new calls for President Joe Biden to step aside, and Gerard Cassidy of RBC as Wall Street kicks off earnings season. We begin with our top story, the 7-day winning streak for the S&P 500 coming to a close with a big move out of big tech. John Stolfus of Oppenheimer writing this: near-term volatility could continue to present opportunities for investors to catch babies that get thrown out with the bathwater in periods of downdrafts, as the market digests levels of uncertainty that are not uncommon in times of transition in monetary policy. John joins us now for more. John, we'll get into the new price target on the S&P 500 in just a moment. I think we all want your reaction to the price action yesterday in response to the data we got at 8:30 Eastern Time.
Well, Jonathan, I think it was most certainly the market celebrating the thought that the data that came out would give Jerome Powell the opportunity to cut earlier than after the election. So it looks more like a September when the futures went from 70 to 90% in terms of the chance that that we'll get a rate cut. I think it's a little bit overdone in its anticipation of that. I think the Fed's independence is an issue that the Fed will need to think of ahead of an election before it does that. But it does seem that one thing for sure at the moment, okay, not with any other data crossing the transom yet that would be contrary to that, it does look like the Fed really is getting very near the end of this Fed funds hike cycle. And the market, of course, likes that, and doing it without a recession.
John, you've always talked about the importance of earnings, though. If we can park the data from yesterday, let's pretend it didn't happen. I know that's a big ask. Let's pretend the news conference yesterday didn't happen either, and let's pretend bank earnings don't come out later this morning. Okay, that's a long list. I know. It's a long list, granted. But the only thing, apart from all that, that we'd be talking about this morning, John, would be the numbers from Delta and the numbers from Pepsi. It wasn't a great start to earnings season. I just wonder how you thought about that as those numbers dropped yesterday.
Well, without getting too specific on the names, let's just put it this way. Anyone who flies on a plane knows that capacity has been, on commercial aircraft, it has been in the back end of the plane. There's more seats available than there were before. Up front, it's tough to get a seat. It's tough to get an upgrade. Because both business and the everyday fun traveler are flying up front. But the idea is here, not surprising on the airline and related to the soft drink and snacks maker, it's a staples stock. It's good dividends, but of course it's got all these drugs that are coming out that kill people's appetites. And the question is, are you still going to, down a bag of potato chips or another brand name, that as you would before, and I think that's the issue.
Wait, hold on a second, John.
It's idiosyncratic.
I'm so sorry, but John, I have to break in there. Are you saying that some of the weakness that we might be seeing in the likes of Pepsi and Conagra, for that matter, is because of Ozempic?
I think very well. I don't know about Conagra, but I would say related to Pepsi, it most certainly has been a question that has been raised by components of the market moving forward. Personally, I feel that, I don't think everybody is going to do these drugs, and I think Pepsi will probably do fairly well, but I'll leave that to our analysts to speak with you about that, because I manage money and the firm doesn't like me getting in the weeds related to individual stocks, regrettably.
All right, well, let's talk about the overall index. You did recently upgrade your year-end forecast from 5,500 to 5,900, talking about the resilience overall in some of the AI-related names, this trend that's kind of fueling a lot of the optimism right now. I'm just curious whether some of the recent price action and the knee-jerk reaction of markets to the prospect of a rate cut make you question that?
No, they actually don't. I think because what we have happening in technology is both cyclical and secular in nature. It looks like some kind of a watershed, as was the introduction of the PC and later on the laptop and later on the smartphones into technology beyond the point of the early internet, and not tech bubbly, let's put it that way. And if you look at the declines yesterday, I think the with the S&P, you had real estate and utes and materials were the top performers, and at the bottom were communication services and information technology. But if you consider the fact that tech is still, after yesterday, up 32% year to date, and communication services is up 27%, it's a haircut, not a rout. It's just the market is broadening. Stocks appeal across the sectors. There's a realization that among the 9 other sectors, there's lots of what I would call AI proxies in terms of companies that can utilize the AI that exists today, the AI that's coming down the pike, and to become more efficient. And that efficiency goes to both companies, and it also goes to the consumer. So if business and the consumer are using this is a pretty big thing. But I do believe that people are recognizing now, after this, from the start of this year, this narrow rally among 7 stocks or so. The reality is, there's financials, there's consumer discretionary, which has been fairly well ignored, even though it's had double-digit earnings last reporting season. It's off to a pretty good start right now. All in all, when you look at it, it's with the prospects of the industrials picking up with infrastructure spend and reshoring and friendshoring and all the stuff. This is a very interesting time, and it should be good for stock prices because it'll drive revenue and it will drive profits.
Hey, John, wonderful to get in touch with you this morning. Thank you, sir. John Stolfus there of Entrepreneurial on a morning where small caps are outperforming. Once again, the S&P 500 firmer by 0.1%. The outperformance once more, Lisa, on a Russell.
Lots of fish in the sea. That's kind of what you keep hearing, Now we're looking around and things are looking not so bad. And that's basically what we've been hearing from a lot of people. Let's just be honest about that. Key question is, can the index continue to climb higher without the robust participation of some of the high flyers, as many people have been calling them, for the remainder of the year? We heard from John, yes, because of some of these other names. And I guess those we're going to test maybe with financials later this morning.
It's quite a move yesterday to see the S&P down by almost 1% at the close and have more than 400 or just a little bit less than 400 members of the S&P 500 higher on the day.
It highlights just how dominant those Magnificent 7 are and some of the idiosyncratic stories. I know later we're going to talk about Tesla, but Tesla was down more than 8%. That's a pretty big component of the index. You start looking at this, and that was more fundamental.
Ed Ludlow, the reporter behind some of those moves, is going to join us a little bit later. Let's get you an update on stories elsewhere with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. More trouble for Boeing, warning some 737 MAX customers that deliveries could be further delayed for 2025 and 26. Sources tell Bloomberg the plane maker said timelines may slip by 3 to 6 months, on top of already late handovers. Just another reminder that Boeing's production of its cash cow model faces a long road to recovery. And I'll give you a little teaser for Ed Ludlow's story on Tesla. The shares are down another 1.8% in the pre-market trade. The EV maker is postponing the long-awaited unveiling of its robo-taxi by 2 months from August until October. Sources tell Bloomberg that the company is pushing back the date to allow its teams more time to build additional prototypes. Optimism about the event had contributed to an 11-day streak of gains, which ultimately added $257 billion to the company's market cap. That was before shares dropped on Thursday by the most since January. And the late Silvio Berlusconi will join the likes of Leonardo da Vinci and Marco Polo in having one of Italy's airports named after him. Milan's Malpensa Airport will reportedly be renamed for the billionaire-turned-politician who died last year. Berlusconi was a flamboyant media mogul. His reign as Italy's longest-serving post-war prime minister was plagued by sex scandals and corruption allegations. That announcement upset many Italians. Milan's mayor called it crazy, and more than 120,000 people signed a petition demanding a reversal of that decision. And that's your Bloomberg brief. John.
Danny, thank you. Were they all Inter Milan fans? That's all we want to know.
Oh, yeah,
okay.
I like that.
The AC Milan half of the city, probably not too fussed with this.
Well, how do you feel about it, John?
I had a very, very different view of him. Of course, much more controversial later on, but when he took over our club in the 1980s, you grew up with a different view of Silvio Berlusconi and all the success your football team had.
I immediately just...
It's like ask a Chelsea fan what they think of Roman Abramovich.
Okay.
They'll have a different view to everyone else.
All I can say is I immediately Googled what his favorite food was to see what the airport would look like.
Oh, right. What was it?
I haven't found it yet.
Okay, keep
Manzo
looking.
alla California.
Okay, you keep looking. Up next on a program, mistaking your allies for enemies.
Now I want to hand it over to the President of Ukraine, ladies and gentlemen, President Putin. President Putin. He's going to beat President Putin. President Zelensky.
The conversation's up next, live from New York this morning. Good morning.
On the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure. Don't miss Bloomberg's interview with the
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
DOJ or other authorities.
Could face bigger challenges next.
Fed was going to keep bringing the World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Live from New York City, welcome to the program. Equity futures on the S&P 500 firmer here by just 0.1%. The outperformance once again on the small caps, just like yesterday. Let's see if that sticks. Under surveillance this morning, mistaking your allies for enemies.
Now I want to hand it over to the President of Ukraine, who has as much courage as he has determination. Ladies and gentlemen, President Putin. President Putin. He's going to beat President Putin. President Zelensky.
President Biden mistakenly introducing Ukraine's leader as Vladimir Putin before dropping the ball straight out of the gate in the news conference that followed.
Look, I wouldn't have picked Vice President Trump to be Vice President, but I think she's not qualified to be President.
Those gaffes overshadowing a near 1-hour news conference where he demonstrated a decent command over complex topics. For some, it was never going to be enough. Almost immediately after the news conference ended, at least 3 more House Democrats joined the growing list of lawmakers calling on Biden to step aside. Anne-Marie joins us now from Washington. AMH, you were in the room. How did they react when those gaffes dropped?
Well, first off, we should note that he pretty much lost the news cycle before we even stepped into the press conference because he introduced President Volodymyr Zelensky as President Putin at his prior event. So already you can sense this was going to be incredibly tense, and he really needed to outperform. And then his first answer, he mixed up his vice president, Kamala Harris, calling her Vice President Trump. The room was silent, but you could see there was a few sighs. People were trying to hold in their gasps, and the faces on people clearly said, ooh. And then they started sitting on basically the edge of their seat to see whether or not he was going to make another gaffe. So that completely overshadowed the fact that actually when it came to some complex issues, like you mentioned, when he was talking about Gaza, China, Ukraine, he had a good handle on the material. And it wasn't like the debate where he was losing some train of thought. But these gaffes is what has taken off, not just on social media, but also just a few moments ago, about a 5-minute segment on Russia TV, a composition of all of President Biden's gaffes. And that is why it wasn't enough to stem the bleeding, but it was enough, his performance,
to give him a few more weeks, and let's see how he performs Monday evening when he sits down with NBC.
Anne-Marie, stay close. Let's continue the conversation with Isaac Boltanski of BTIG. Isaac, I don't know about you, but my sense of that news conference, that was the first time in the last couple of weeks that I think the sitting president showed some humility. Just this idea that he was somewhat open, just a little bit, relatively speaking, to being replaced. What was your sense of things?
Yeah, look, I mean, if we start with the overarching view of last night, it was undeniably a Rorschach test. Everyone got a little something of what they wanted from last night, right? We can focus on the gaffes, and that's what the folks who want him to step aside are going to highlight. But he did have, as Anne-Marie said, an impressive command of the issues. And I think that's what you're going to hear from his supporters. And so, at least for me, the way that I think about this right now is he has been in survival mode. It's been about survive and advance. And last night, let him advance. And we're going to advance now to next week, where we've got to focus on how he's going to do at some of these press events, but also during this interview on Monday evening.
Isaac, as this progresses and as he buys time week by week, how much do you think this gives the chances of Donald Trump winning the presidency get bigger and bigger and bigger?
Yeah, look, I think that Trump was the favorite before the debate, and he is even more so now. And I firmly believe that the Trump campaign is more than happy to let the Biden camp fight it out with elements of its own party. They love this intra-party fighting, and they would be happy if that would continue for the foreseeable future. I wouldn't be surprised if they would like this to overtake even the headlines from their convention that's coming up next week. So look, my message to clients here has been pretty straightforward. Trump was the favorite before this. Trump is the favorite after this. But to me, what's happened over the past few weeks really underscores the likelihood now of the increased likelihood of a GOP sweep. Because I firmly believe the House is going to go whichever way the White House goes. And I think that margin is going to continue to increase if Democrats are squabbling over who's atop the ticket.
Isaac, there's some reporting that Joe Biden's campaign is quietly polling the public to see how Kamala Harris fares against Donald Trump. What do you make of that reporting?
I think part of it is the humility that John talked about, right? I think that he was open to that idea that he had a terrible debate, and that ultimately the goal here is to beat Donald Trump for the Democrats. I think that one of the things that didn't get as much coverage because we were all just dealing with the fallout from the debate was his follow-up where he said that if he lost, he would be okay with it. Democrats have to square the circle there, right? Either Trump represents a existential threat to democracy and needs to be stopped at all cost, or it's okay, we can lose the election, right? And I think that's something that we're trying to see Democrats grapple with in the wake of the debate.
Isaac, we keep coming back to pressure points, and there's three of them really: party officials, donors, polls. Of those three pressure points right now, what do you think is going to be the greatest for this president?
Yeah, look, I think there is a committee to unelect the president. I think that committee is growing by the day. It grew last night. For me, I think that committee's main cudgel, their main way to influence the debate is going to be polls. And we're going to have to continue living and breathing with every single poll. And to me, that's number one. Number two is, look, the president in some ways is going to be Sisyphus, right? He's going to have to push this boulder up the hill every single time he walks out of 1600 Pennsylvania Avenue. And every single gaffe he makes when he's out in public is going to be one that we analyze to the hilt. Because look, it's no longer, your crazy Uncle Joe, right? We're talking about cognitive capacity to be president now and to do so for another 4 years after this. So look, I'm watching the polls, of course, that's number one. But number two is every single outing he has is now going to be like the Super Bowl for him.
Isaac Boltanski of BTIG. Isaac, thank you, sir. Yesterday was a difficult day for the president. Not the gaffes, not the news conference, the lead up to it, report after report, New York Times, some Biden advisors discussing how to convince him to step aside. The Biden campaign testing Kamala Harris's strength versus Trump. You alluded to that. Politico, Obama was in touch with Clooney before the op-ed came out, didn't advise him but didn't object either. It was headline after headline, just relentless over the last 24 hours.
Which maybe was the reason why, at least for me, I was interested in some of the jabs that he had against his own staff during last night's press conference. They just keep adding things to my schedule. They talk a lot. How much he's sort of pushing back against this.
Credit where it's due, joke of the night. Good golf joke. in that news conference? Writing down the score before you've hit the ball.
That was pretty good.
That was a pretty decent golf joke. We'll give him that. From New York City this morning, good morning.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Live from New York, welcome to the program. Equity futures on the S&P 500 firmer by almost 0.1%. The standout, though, once again, check out the Russell. The small caps up another 0.75%. Lisa, after a mega gain in yesterday's session.
To me, okay, it was the best performance going back to December. The equal weight S&P 500 versus the market cap weight had the biggest divergence going back to 2020. This was a seismic day and shifting back to broadening. You asked the right question. How long can this last? And how long is this going to be a positive, given how many people are hinged to those Magnificent Seven?
How durable is this move? You know, to state the obvious, I guess we're going to find out. But ultimately, to see people jump on the bandwagon yesterday was pretty phenomenal, wasn't it? This is it. I'm so happy. And I'm sitting there thinking, you know, a lot of people just own the S&P 500, right? You know, they're not going to take much comfort from you telling them that almost 400 members were up even though we're sort of down by almost 1%.
So there are two interpretations, and you are correct. One is, okay, maybe there's something amiss here that people aren't understanding how the index can actually keep climbing if you don't have the participation of the Magnificent Seven. And then you have the John Stoltzfus view of things, which is, it is so nice that people are taking some profits and going into the others, and then they're going to realize everyone just gets lifted up, and it's a wonderful evolutionary cycle of innovation and growth, and all of a sudden we can go into everything, and that's how you can get higher. That's sort of the tension right now.
In the driving seat is this right here. Switch on the board and get to the bond market. And let's just sit on the front end. Had a double-digit move yesterday, close to 10 basis points. 451.66 is where the 2-year is right now. We've said repeatedly on this program, not all rate cuts are created equally. Keep talking about it. Some are bullish, some are bearish. If you're responding to a collapse in the labour market and you're cutting rates, that ain't good. If you're responding to inflation and that backdrop improving and the labour market's holding up, that's a really decent picture, not just for the economy, but for financial markets. That's what we got in yesterday's session.
The fact that initial jobless claims came in lower than people had previously expected, it basically gave a nod to this Goldilocks that everyone's been hoping for. Key point within the CPI, which also gave people a real sense of relief. Michael Reed of RBC pointed this out. They finally started to see some decline in owner's equivalent rent. That has been the key aspect kind of keeping people back when you start to see that disinflate and things get cheaper. The point is here, right now, it seems like the Fed is threading that needle. And it seems like they're threading that needle just perfectly. And that's the reason why a number of Fed officials are saying, okay, let's go before we don't thread this needle anymore. We don't know yet. The jury is still out, and that is why I think that this earnings season is going to be so important.
JP Morgan, about 10 minutes or so away. We'll break that down for you in just a moment. Talking to threading the needle, no needle threading whatsoever over in Japan. For the Ministry of Finance, this is just about hammers. And when dollar yen's down, just beat it up. Just beat it up even more. We've broken 160, 159.22. Yesterday, we had a little look at 158. At the close, 158.84. We had seen in yesterday's session something close to 162. So you get that dollar weakness. And according to reports, Lisa, the ministry just sort of piling on and intervening.
Yeah, with $22 billion of estimated intervention in terms of trying to encourage this move. That was perfectly described. That was my image last night, was they saw CPI,
Get it.
They saw the move, and then they're like, let's go. This is our chance to put good money after good, or, you know, good money after bad, but actually make it count. Question here is, are they just basically trying to propel a move that's already in the market, basically take advantage of market opportunities, or is this something that's durable at a time where there still are some structural differences between the two economies?
Some big moves in yesterday's session across the equity market, the bond market, and foreign exchange as well. Under surveillance this morning, at least 3 new Democratic lawmakers calling on President Biden to step aside after his news conference last night. Biden making 2 major gaffes in about 2 hours. The president now preparing for another high-stakes interview with NBC's Lester Holt on Monday. I guess we've got to ask the question, Lisa, at what point are interviews no longer high-stake interviews? And if you're looking ahead to next week, my question would actually be not for the president, not for the Biden campaign, it would be for the RNC. Can the Republican convention actually do a good job of keeping out of the news cycle and keeping the pressure on the sitting president?
Well, it's not something that typically Donald Trump has been particularly good at, considering the fact that he enjoys the spotlight and is quite good at it in terms of getting it. Here's the question that I have. At what point are people coming out against Joe Biden, regardless of what he does or what he doesn't do, in terms of messing up or having a real fatal blow in terms of a sort of irreversible gaffe? At a certain point, it feels like people are trying to gain momentum earlier so the damage is staved off and they allow another candidate to get some momentum. That is what I am watching. How much people are coalescing, not because they're concerned about another gaffe or something else, or even any kind of disappointment with his performance, which a lot of people think has been pretty good. The issue is, let's get ahead of this, because right now we are losing, and you got to get on this now.
Another big weekend and big week still ahead for us for the President of the United States. Big day yesterday for Tesla. I know sort of overshadowed by some of the news elsewhere, but the company pushing back the debut of its new robo-taxi, according to people familiar with the matter, telling Bloomberg the event won't happen until October, after originally being scheduled for August 8th. Teams are expected to work on additional prototypes. We were down yesterday, we're down again this morning by 2%. Ed Ludlow and the team breaking down the story. We're going to catch up with Ed in about 2 hours' time. This has been the carrot over the stock. since April. This August date where we'd get this update on robo-taxis and we'd stop talking about the negative growth that this growth stock's been experiencing for the last few quarters.
So there are two questions. Is he just trying to get it perfectly so that when he unveils it, it's going to be something that's really viable? Or does this highlight some of the difficulties in creating this type of product? We saw the flip side, Uber and Lyft shares gained quite a bit on the heels of this because that competition wasn't necessarily going to come to the fore quite as quickly as some people had previously thought. To me, it seems like the can's getting kicked again and again. And how long is there going to be forgiveness in the market? We saw a sniff of that yesterday. Really, it's going to be interesting to see whether that continues.
Down this morning by a little more than 2%. Let's get to the earnings. Lisa mentioned it. Earnings season kicking off on Wall Street with the big bank sets report throughout this morning. JP Morgan and Wells Fargo expected by 7 a.m. Citi expected to report at 8 o'clock Eastern Time. Goldman, Morgan Stanley, Bank of America, all coming next week. Gerard Cassidy of RBC joins us now for more. Gerard, I love doing this with you. Every single time we kick off earnings season for the big banks, walk us through what to look out for in the next hour or so.
Jonathan, I think what we're going to see is a couple of real big trends. First and foremost, net interest income. As you know, the net interest income comparisons for all the banks on a year-over-year basis has been negative, with the exception of JP Morgan. I think that's going to be one of the biggest trends that most investors will focus on. They're looking for the inflection point when net interest income growth on a year-over-year basis turns positive. We expect it to happen in the second and third quarter of this year. Second, credit quality. As you know, we've talked about in the past, the office markets in the United States, in the big cities, in Class B and C buildings, is very weak. There are many losses that are being taken in that area, so we're going to look for insights into that market. Third, for the big banks that are reporting over the next 48 hours or 72 hours, what we're expecting is what's going on in capital markets. The guidance they gave in June, investment banking results, as well as what we see in deal logic numbers, are going to be very strong. Trading results are going to be more muted, but we could see maybe a surprise to the upside there due to the volatility that was created in the second half of June due to what was going on over in France in their political environment.
Joe, to build on that, we have to talk about the last 24 hours. This is a market environment, at least recently, in the last day or so, where smaller companies are being rewarded and bigger companies that have done well so far this year have pulled back. Given the environment that you described for banking, do you think this is an environment where the big just keep getting bigger? Or do you think this is an environment, at least developing into one, where the smaller names can start performing?
John, I think you put your thumb on it. The smaller names can start performing if, as Lisa was just talking about, the Fed threads the needle and we see a Fed funds rate cut in September and December. The smaller names rely more on net interest income as their revenue driver rather than fees, which of course the biggest banks have a much bigger percentage of revenue coming from fees. So therefore, if you do believe the Fed's going to cut maybe once or twice this year, maybe 3 times next year, the smaller regionals and regional banks should now take leadership amongst the bank group because of that driver for revenue.
There is this issue, though, about benchmark rates coming down and what that does to some of these banks. Yesterday, we saw kind of a motley performance. Smaller banks did outperform, though, as you mentioned. At what point does that become difficult for loan growth and for making profits on loans, given the fact that a lot of these companies still are dealing with trying to retain deposits?
Lisa, what's really interesting is that if the Fed starts to cut rates, we're going to see what we call the third act of the interest rate cycle, which is your funding costs, your deposit rates start to come down as the Fed cuts rates. But you might remember many of the banks put on their books bonds back in 2020 and 2021, as well as loans with coupons that were anywhere from 1% to 3%. As those pay off, those cash proceeds are reinvested now in higher yielding earning assets. So you're going to see spreads and margins improve even with minimal or no loan growth. So loan growth would be the icing on the cake for these companies. But even if you get modest loan growth over the next 18 months, the margin expansion just from the dynamic of the earning assets paying off, being reinvested into higher yielding assets and your funding costs coming down means net interest income growth is going to be positive.
We're about to get reports from JP Morgan. And then, of course, we're going to hear from Bank of America, and then we're going to be hearing from Wells Fargo, and then from Citigroup. Which of those companies do you think is going to be most interesting?
I think what's going to be interesting is Bank of America, because when you look at JP Morgan Chase, obviously they have delivered very strong numbers. Everybody expects that trend to continue. When you look at Bank of America, they have been the bigger net interest income story. We don't think about net interest income as much for the large banks as we just talked about, but this company has had a more focus on net interest income. And you might recall back in 2023, when we had the problems with the banks in the spring of 23, there was a big focus on the unrealized losses in their held to maturity portfolio. And if this 10-year government bond yield continues to fall, those concerns of the lower yields in that portfolio become less of an issue as we go forward. So that's going to be, I think, of the big three, that could be the most interesting one today when they announce their numbers.
The stock has had quite a run so far this year. Year to date, up by a little more than 24% on Bank of America. Joe Cassidy, stay close, sir. We're going to break down those numbers from JP Morgan with you in just a couple of minutes' time. Before we get there, an update on stories elsewhere this morning. With your Bloomberg Brief, here's Danny Berger. Hey, Danny.
Hey, John. The Bank of Japan is believed to have stepped into the currency market for a third time this year on Thursday. Broker forecasts estimate that the BOJ intervened to the tune of about 3.5 trillion yen. That's about $22 billion. The figures indicate that Japan's authorities tried to take advantage of a buildup of yen shorts and a cooler U.S. inflation print. The yen strengthened sharply from around 161 versus the dollar to 157, but it is back above 159 this morning. The world's biggest hedge funds are off to one of their best starts of the year thanks to a roaring tech-led bull market and successful quant strategies. According to people familiar, tech-focused equity funds Lake Street and Whale Rock led the pack in the first half, gaining 55 and 32% respectively. As a whole, multi-managers gained 6%. That is their second best start to the year over the past 15 years, data from Pivotal Path show. One sore spot, though, lagging macro funds. Brevin Howard and Eisler both posting losses for the 6 months. Food delivery in New York City has become a luxury. A city agency report found that New Yorkers have paid nearly 60% more in delivery fees in the state since minimum wage laws went into effect last year. Customers as a whole ordering from apps like Uber Eats, DoorDash, and Grubhub paid an average of $20 million a week in delivery fees in the first quarter this year. That's a 58% increase year over year. Meanwhile, delivery couriers saw their overall earnings grow even as tips fell sharply. The agency's report suggests that delivery companies have passed on higher costs to customers. And that's your Bloomberg Brief. John.
Danny, thank you. It's certainly getting more expensive. You notice that?
Well, you've got the order fee, delivery fee, tip, and then it's all of a sudden double the price. At that point, you just start to whip out your cooking books and just tell the kids, just deal with it. I know it's not as good.
Deal with it. Mum's cooking again, which I'm sure is a good thing. I'm sure it's a good thing.
Don't be so sure.
Up next on the program, the big banks kicking off earnings season.
Even under this administration, we're seeing some relief in some of the regulatory constructs. So this whole Basel III endgame rule that would be really, really tough on capital for the banks, Chair Powell said he'll repropose that. And there's nothing more effective for banks than time.
Bank earnings season begins in a couple of minutes' time.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper. I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies.